Good morning. Welcome to Trade Live with IG. It's the 18th of June. Rick Miller joins me. We are back, baby. We are so back. Look at him. Look, he's ready and fit. He's ready and to go. Look at him. He's going to put so far this morning. So I hope he can stay there further too. You never know. I don't think I've spoken to anybody in about 4 or 5 days.
I can hear
like
your voice,
literally.
Your voice feels nicely rested.
Yeah. Very nicely rested. I mean, I get bored of my own voice, but whoa, it's good to be back.
Imagine what the rest of us feel like. Well, welcome back.
In time as well, because the Sosnoff train is pulling into the station. The gents arrived today, along with Brittany, and they will, well, Angelina and I will actually be on the Chicago Tasty Trade program this afternoon.
Nice.
So that'll be going out in Chicago live.
That's so it's a return to the US show for you. Has Angelina been live on our
Angeline's been on when she was in Chicago.
Aha. So we're going to be doing their show from here.
It's in this studio. I mean, take a look around.
Well, it's tidy for once.
It's tidy. It's cleaner than it's ever been.
It's definitely tidy. It's definitely clean. You know when the big boss is coming into town.
Exactly.
It's like when your parents come around, you want to make your bed super early and get everything nice and dusted down and nice and clean.
Yeah, I was going to say more like the Queen. The Queen apparently thinks that everywhere in the UK smells of paint. Because that's the only smell she gets every time.
Everything comes in super clean.
Thank you all, and thank you very much for all your get well soon messages on email. That was very nice of the all 0 of you that sent any. I know it was played down by producer Phil and Angeline.
Were you watching the show Were you watching the show each morning?
I had to watch it on Friday because there was a war going on.
Well, there's still a war going on. But at least, did anyone say in the comments anything at all? No? No, it might not have come via email, but no.
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 It was...
Oh, well, we survived.
But no, the day before, Monday I was flat. I couldn't even watch the show.
Wow.
So, but I did hear and see the messages that we are now over 1,000 subscribers.
Boom.
So we hit the big number yesterday.
Nice. Congratulations to the team. Well done.
Yeah, well done, everybody. And
yeah, well done. Thank you for your liking. Thank you for your subscribing.
And yeah, mostly well done to you guys for hitting the button.
Thank you very much. Yeah, while you're at it, drop the like for this morning's show and subscribe if you're not already doing it and share it with your buddies.
Right, so what is coming up on today's show then? The return of the Mac. It is. Look more through till 8:35, and then look at that brand new segment. Yes, you do not have to adjust your computers or your phones. Charting Crypto is the brand new technical analysis of cryptocurrencies with Axel Rudolph. That's coming in at 8:35.
That's going to be good. That's going to be great stuff. And then Angeline's taking you through the opening bell, and then a live Q&A with producer Phil. We're bringing him in. Wait, hang on a sec. It's a sandwich. It's Angeline, Rich, and Phil. Wow.
Exactly. Don't get them enjoying the juice, do you?
No, triple witching on a rape day as well. And then we've got investing experiences. Billy is back in the studio with Rich, and then Simon Popple.
Yeah, that little red thing is a
replay.
If you didn't catch it first time, that is your second chance Sunday. So, on day 2 of Royal Ascot, shall we go into overnight action and see what we got coming up?
Let's go for it.
Great in. So, we've got a lot of stuff going on, not just, of course, Trump and Iran in his situation room in the White House, but not only day 2 of Royal Ascot, but we've also got Federal Reserve tonight.
I know. We've also had UK CPI out this morning.
Yeah.
Which was actually okay, I think.
We'll take it.
We'll take it. Yeah, better than expected. No, sorry, better than previous, a little worse than expected. So the UK CPI, the headline came in at 3.4%. The market was looking for 3.3, but it came in lighter than that. The previous was 3.5, so that's okay. I think we'll give it okay. But core was significantly lower. Straight into it. Hang on a sec. No, that is fine. We can jump into this.
I was going to say, look, Phil might have even put it in his economic calendar.
There you go. But what it does is it gives me a chance to bring this beautiful chart up that I love looking at.
Now tell us about this.
So this big, beautiful chart, this is the monthly CPI readings every single month. And you can see this is directly lifted from the Office of National Statistics.
Nice.
And what you can see is what contributes to the CPI in color codes. So you can see here, when we initially had this big inflation spike back in kind of late 21, 22, these dark blue lines we know here is electricity, gas, and fuels. Well, we knew that because the cost of energy went absolutely nuts. And so you could see that as this spiked up, everything else was increasing, but not as quickly as energy. And then when that came back down again, we had to deal with everything else. Now, the interesting part, I think, on this, if my mouse tidies up, it's not going to let me do it, is the purple line, which is owners, occupiers, housing costs.
Yeah.
And then the light green line, which is rent. And if you look, this is starting to come off, which I think is positive. So you can see the purple lines come off here. This is the cost of mortgages. This is the cost of rents. This is the cost of actually, money in your pocket as someone who is British, naturally long property, going to be naturally long some form of debt through mortgages, and that's starting to come off. So you're starting to feel the impact of interest rates come down, which is the argument I've been making all along. If you see this purple line growing,
That's tricky.
it was because of interest rates. Interest rates were being increased throughout this entire period. The purple and the green line were increasing.
Yeah, that makes sense.
They start to cut and then it starts to come off again. Now, I was making the argument at the time, but you see the big blue spike in 2022 here, this was all driven by energy. And so to combat the cost of energy, they increased interest rates. So when that energy spike came back down again, what they didn't do is decrease interest rates. In fact, energy, you can see here, became a detractor, was pulling CPI out of the equation. It was deflationary, yet we kept interest rates really, really high. So this is proving my point, which I'm buzzing about because I got a D in my AS economics, that if you cut rates, the housing costs come down, therefore you would expect, in my AS, a D. It just goes to show, kids.
Did you miss the exam?
Just goes to show. Don't let an exam get in the way of a career. But what it means is, you're starting to see this start to pull out again. Now, it has recently been...
This was, so we actually got a lower than expected services reading for the first time in a long time, 4.7% versus 4.8 expected. So, really, really good or reassuring data.
Yeah.
And that takes us on to Phil's magical economic calendar for the day. It's a big day, very big day. Or big 2 days, actually, because, of course, we got Bank of England tomorrow.
We have indeed. Yeah, so housing data coming out at 1:30. Of course, we've already had that inflation data come out. And then the federal rate decision over in the States at 7 o'clock today. And then the press conference straight away, is that right? Usually it's about half an hour later.
Half an hour later, yeah.
Yeah, half an hour later. So 7:30 will be the press conference.
So we've, we can have a look at my screen here. We see the chances, this is for July. There's 100% chance that we see no cut tonight. We've got 15% chance we see a cut in July. But then September really is when it starts to get interesting. With a much bigger chance of a cut there. However, tonight, of course, we get the real fun. We get the summary of economic projections. This is a geek's paradise.
Dot plots, so they call it.
So there is our March 19th, 2025. The last time we see the dots. What are your projections for this evening, Luke Moore?
I think this is going to be really interesting because, of course, the BBB, the Big Beautiful Bill, is getting some stick because of its impact on the deficit. But from various different reports show that they're making a 2% GDP assumption in that BBB. So if these figures come out to be higher than that,
I think GDP goes up. For sure.
I'd bet that it would do as well, and I think that makes the Big Beautiful Bill a little bit more palatable. If you can prove that there is, or if you can expect that there's going to be higher GDP growth as a result of everything that comes through in it, then I think it kind of goes through Congress a little bit easier.
What about the core PCE though? Does that come down to 2.7 maybe? I don't think it goes higher.
Yeah. When was the meeting? Real time now?
Yeah.
Well, it depends I think it depends how long this conflict is going to last and how long the energy shock we may well be having. lasts. Because
Yeah,
if
I
that
don't
starts
think you
to-
can put that into your. You can talk about it, but I don't think you can put it into your SERP.
Would you not?
No, because there's nothing announced. So if there's nothing announced, you can't
What do you mean
start
into the
putting
SERP?
stuff in.
As in into this, but that would potentially feed into the inflation picture, no?
Yeah, but if there's no attack announced, then you can't start to build it into anything. They only deal on facts.
Fine. Well, the fact is, oil's up loads in the last 2 weeks, so that would start to filter in, no?
Yeah, I know, but I don't think you can start putting stuff into policy just on a short-term move in oil.
Fine, but this isn't policy. This is expectations.
Yes, policy projections.
Right.
Your core PCE, I think, comes down because the actual figures have been lower.
Fine.
So
okay.
you get 2.7 on core, and you get an increase in GDP. So that's a double positive. But then the projected path of 3.9%. Yeah, I'm not sure you see much of a cut there. If
What's
anything,
the
it could go up?
What's the Fed watch for December projection? Is that what's being pulled in here? Let's have a quick look.
This one?
Yeah. So if you go to the probabilities on the top left, there you go. And then what is it suggesting in December? Where's the blue? The blue line in deck is there's a 40% chance we're between 375 and 4, 20% chance we're lower. So yeah, that's roughly pricing in a 3.9 figure. That's the current market price. So I don't think that changes considering this is live, and obviously that was data expected back in March.
26 is the more interesting on December. So what are we there? We're at 3%, and I think they're 3.2.
There was a very interesting. Did you listen to the All In podcast?
3.4. Okay, so maybe that.
Did you listen to All In this weekend?
No.
I've started listening to it since the interviews they were doing with Lutnick and Besson ahead of the vote. I've started listening to it, and they made a really decent argument this weekend that Powell is stuck between a rock and a hard place when it comes to changing these rates, because if he cuts rates, you're playing into Trump's hands politically, but if you don't cut rates, you're also working against policy. So by the very nature of being static,
I don't honestly
about
don't think the Trump thing
politicised.
comes into it at all. I think he completely ignores
he
either way.
has to try. But retail sales yesterday was pretty crap.
Right.
And almost 1% lower than expectations. Sorry, expectations was for a drop of 0.8, I believe, and it came in 0.9%.
Let's have a
As a
look.
reduction last month. So is the consumer
we go.
starting
So-
to deteriorate a little?
Retail sales, the ex-autos or?
Retail sales, they go minus 0.9 at a headline rate. Market was looking for 0.1, that was it.
No, 0.7.
But the previous was 0.1.
Right, okay.
Yeah. So it came in a lot lower than expected, which was not great. Doesn't bode well for the dollar on that sense.
Yeah.
But the dollar's been getting stronger as a result of a bit of a flight to safety.
So that takes us on to the headlines this morning. Trump calling for Iran's unconditional surrender.
Did you see, by the way, this other headline, Iranian state TV anchor, did you see this clip?
Wouldn't fancy that, would you?
Jeez. And I sympathised because, of course, we work in a TV studio here.
Yeah.
And, I mean, if you haven't seen it, the clip is horrific. The building gets bombed whilst she's live on air. And she just legs it. It's pretty crazy.
I think I'd continue on the broadcast.
You would just be like, it's ever the professional.
It's quite funny. So sometimes when Angeline comes on, I go outside to Cannon Street and grab a coffee.
Greg's.
No, not Greg's. Excuse me. And anyway, I walk up round Cannon Street in front of the train station, and of course there's everybody coming out for their 9 a.m.
Yeah, it's chaos, isn't it?
rush hour. So last week, it must have been Wednesday, there was a load of police there. And obviously they had the heads up that, something might be about to happen. And we're talking, 15 sort of, police, some of them armed. And I'd forgotten to take my headpiece off. So I had this wire on my earpiece as I'm walking through. And of course, everybody was looking at me. And I thought, why is everybody looking at me? This is a bit
secret agent
weird.
McDonald.
I thought I was.
Yeah.
Yeah. So I don't think I relaxed the atmosphere
No. Did you figure out what it was for?
on the way back. Yeah.
What was it? Oh no, sorry. Did you figure out what the crowds were for?
No.
No.
Thankfully, nothing happened.
No.
So yeah, so we've seen the Turkish woman who had the earthquake, and she started texting her mum to make sure mum was all right, and then we saw this missile attack. So
Yeah, crazy. Don't hate on people that are on TV. It's just tough. I mean, in terms of the conflict, is there anything to say in the last kind of 24 hours? It feels like
this is huge, right?
It feels like
They've clearly got an indication suddenly that they can get regime change.
Yeah. Well, from what I was reading, I was on the late shift last night, and Trump was locked in the situation room because supposedly with Israel targeting the nuclear facilities of Iran to try and disable their ability to enrich uranium. There's one mine or one base left that hasn't been hit, and it's buried deep in a mountain.
Yeah.
And so they need. The only people that can hit them are the US or US bombs. And I suppose the conversation now turns to, if that is the way the conflict is proceeding and the operation won't finish until there's either regime change, which politically, and I suppose, what's the word I'm looking for? Not democratically, it'll come to me. Instead of using politics and conversation, they're going to use force, and that is the problem, because if the US gets involved now, it becomes you'd argue it becomes a wider conflict. Russia are already saying these taxes are illegal.
The market's so relaxed.
I am too.
The US attacking Iran and forcing regime change is something we would never have fathomed 2 weeks ago.
No.
But we're sitting happily at 6,000. It's absolutely crazy to me.
Although in fairness, we've basically been at 6,000 for the last 6 months, let's be honest. We haven't really moved anywhere. We've been up, we've been down, we've been up, we've been down. You could argue that we've been at 6,000 now for a long while.
I would have said that this was something that might take us away from it, though.
Yeah. I mean, you've got gold up, you've got oil up, real assets are up, but the S&P is basically where it has been. So, yeah, it's a conversation that's going to continue, of course. And headlines. Do you know what? I think this is actually a really important time to just flag the Twitter feed that we have on the right-hand side of the platform.
Yeah.
Because I'll show you on my platform and when I can get it on my screen in just a second.
You can put mine up, guys, if you want.
If you've got it, yeah. On the right-hand side of the platform, if you haven't already used it, there is a curated Twitter feed that we constantly add people to and pull people out. When there's such headline risk in the market that will be market moving, this is a fantastic tool that just sits there in real time and just updates when there's a tweet, when there's a reporter, when there's something that's been retweeted by one of the main outlets. Here we go. So first Squawk, these guys have been exemplary recently. The Israeli army report that it successfully intercepted 3 drones launched from Iran. Stuff like this, when it's market moving, you're going to get it way quicker than a written article, way quicker. So it's awesome to keep an eye on.
I think we have to question Chris Beecham's place in this war.
In the war or in the feed?
In the war. Because if we
because he's known as being a super aggressive organ playing macro commentator.
It's his fault that Trump is being so aggressive.
I'd like to see where you work this one out. Go on.
If you remember, we're going to keep the chart up there forever, guys. If you remember, Chris Beecham was one of the main perpetrators in calling him taco.
No, I don't think he was.
He was.
He didn't coin the phrase.
No, he pushed it though. He was quoted on BBC and New York Post.
Did he get quoted in the New York Post?
So it is actually Chris Beecham that took the term taco to the mouth of the CNBC reporter, who then put it to Trump and made him really angry. Tell you what, he hasn't chickened out of anything since.
No, not yet at least.
If you're calling Trump a chicken, next thing he's attacking Iran. So Chris Beecham has a lot of support here, I think.
Well, he didn't coin the phrase because we were having a conversation about it before he picked it up off of Twitter or something like that. But yeah, actually, on that note, I don't know if this has been discussed on the show already. Can I tell you my new favourite indicator? Speaking of things to keep an eye on, have you seen the Pentagon pizza report?
Yes, this
Have you
is
seen
brilliant.
this? So if you want to pop my screen up, there is now a Twitter feed called the Penn Pizza Report, and I'll zoom in on this so you can see it, that is keeping a track of all of the pizza places that are open near the White House. And so 2 hours ago, things are ending quite quietly, less than 5 minutes to close. Most locations are showing low traffic. The closest Domino's to the White House has elevated levels of traffic at 8:04, and Google can track it. I just think this
So
is
ridiculous.
so ridiculous, but also quite funny.
Yeah.
7 o'clock. Look, there's a huge spike in the Domino's nearest the White House. They're experiencing high traffic.
They absolutely nailed it on the night before the first Israel attack, though.
Yeah.
So that's
What do you do when we have a busy day in the office and we're all asked to double down and stay on the phones? Pizza turns up.
Yeah.
The guys go and order some pizza. Brilliant.
Right, let's look at the futures ahead of this open then. So US 500 up 22 basis points. Absolutely bonkers. Going into a potential war in the Middle East.
Yeah, kind of in line with a bit of dollar weakness there, though. Cable's back up a third. S&P's up a third-ish. Perhaps.
Yeah, doesn't make sense.
Doesn't make it easy.
You've got, copper up 73 basis points, 489, and then, all waiting to find out what happens next.
Yeah, we will see. Should we do some UK stocks, or do you want to do that in the next session?
Yeah, go on.
Yep.
What have you got? Warm us up.
So, Ocado, a name that I've long liked. They've announced that they're building a new CFC, which is their turnip phrase for one of their big warehouses, a fulfillment centre.
Oh, yeah.
In Spain with Bon Pair, which is a Catalonian supermarket. So they've got a decent contract coming through there. Elsewhere in the UK, Tullow Oil. They may be looking a little weaker today. There's a failed merger attempt, as Kleinman reports that Merin Energy have walked away from talks.
Really?
So see if we can get an early indication on Tullow's. Your boys Vodafone have been tipped in the Times.
Yes, they have.
They've been tipped in the Times. A weak valuation does not reflect the turnaround potential, and Tempest has tipped them as a buy.
Let's get that story up there. Give it the...
Have a quick look at that while you're finding
dear.
the story. I also just want to take and call out PZ Cussons. They are a consumer goods brand. They look after things like Carex. They are to buy. Sorry, Wilmar is a private equity business. They're to buy a 50% stake in a joint venture for $70 million. They've also put a trading update out there, expecting like-for-like growth to be 8% up, with revenues around 500 million, operating profits guided a little bit lower than where they were before.
Nice. Right, let's look at those very clever people in the Times. Should I buy shares in Vodafone right now? That is in the Tempest column. So, just highlights the cheap valuation. Doesn't really give anything new, but it certainly underlines the story that we've been talking about for a while. And producer Phil just admitting that he's been buying Vodafone in his pension.
There you go, for the dividend coverage. Very good.
There we go. The share price makes it worth placing greater faith in Vodafone's turnaround materializing this time. Nice. Just another couple of comments on a sector that we're seeing a lot of interest in at the moment, these Bitcoin treasury businesses. Yeah. So Coincilium have announced that there was an oversubscribed retail offer. They raised 4 million at 22.2 pence. And SWC, Smarter Web, I know that was something that we followed a little bit on the show. They've got Jesse on board.
They've brought Jesse Myers. Now, do you know, I don't know who that was as a name actually.
That's big.
Who's that? So who is he?
So he's worked with strategy and with I guess this underlines the whole power that SWC has, that it's not just Andrew Gone himself. He's part of this UTXO family, which is Metaplanet, which is strategy. So a big signing there, and the show goes on. I see Andrew McKelvey managed to nick 50% out of a 2-day trade.
Nice. Yeah. I'm sitting here. I've got some significant FOMO going on right now.
Oh dear. Right. I think we've got chart of the day for you. What country is it in, producer Phil?
In the
It's
UK.
a UK stock. And we are ready. On your marks, get set. Fastest fingers in the chat first wins. Let's see those answers. Go.
Welcome back for the opening bell this lovely Wednesday. And congratulations to all you that got my favourite stock, Scottish Mortgage. Yes, it was indeed. It was indeed. Annoyingly stuck at that £10 level. Hasn't moved. Still trading at a discount to its net asset value, but tracking the Nasdaq as it does fairly well correlated. But well done to those who got it.
And we are in line with our target. So our target was Scottish Mortgage Trust to get 1,000 subscribers.
Mm-hmm.
I think we're small beating it now, unless it's up this morning. So yeah, but I do hear the bagpipes in the background. There was somebody who was very close. Mr. RK was guessed Burberry. Now that brings us on to this. So I was. I mean, it's not the best picture, but I was travelling through Heathrow the other week, and as you do when you travel through airports, you go and have a look in all the fancy shops. Right.
And yeah, we were going to Copenhagen, known for being quite rainy, and it was a rainy weekend.
Yeah.
And yeah, I saw that. It's too expensive though. Let's just say that.
Okay.
1,600 quid. 1,600
Wow.
quid.
Wow.
Unbelievable. Right, here we go for the opening bell.
Right. right, so there we are. We are off and running for the 18th of June, day 2 of Ascot. Not there this year. Absolutely gutted.
Any runners on?
Absolutely gutted. Haven't even looked.
Haven't even looked.
I'm disgusted with myself that I'm not there. So,
yeah, okay. Well, Scottish mortgages come out the blocks down a quarter, just 3 pence over 10 quid. So we're probably beating that now, I'd say.
yes.
Come on.
Right, as you said, the banks are strong this morning. UK banks, a couple of them there. Up 60 basis points, Lloyds and Barclays. And NatWest up the same as well. So up as a group. Vodafone clearly liking the Times wise words. What else you got for us there?
Ocado, off the news of their deal with the Spanish retailer, they're up 4.3%. So that's positive for them. How are AO World going? Because we didn't mention those in the pre-bell. They're at 1.2. So they came out with some results. Their full year revenue was in line with expectation, 1.1 billion. Their operating profit, 21 million. And their sales growth was in line with their B2C retail business. So
Nice.
Through a risk there, I think you put that as. Through a risk.
Not too much happening on the downside either. Weatherspoons, people not been drinking enough in the sunshine. Canal Plus down a small 30 basis points. But these are all just rounding errors. There's nothing really moving ahead of. There's Ocado, up 4.
Yep.
Up 4.
Up 4. Also a holding in Scottish Mortgage, actually. Small one. They're in there.
IAG, wow, I mean, tricky. It's very much a case of wait and see this morning, I think, because you've obviously got huge goings on in the Middle East, and you've got Fed as well, and then Bank of England tomorrow.
Yeah, but it seems like what's on the kind of detractors level? What's going on at the bottom there? What's moving down? Defensives, really. AstraZeneca, Weatherspoons.
Oh, it's the farmers, because he's talking about pharmaceuticals, isn't he?
What's he said about farmers?
That the tariffs are coming.
Yeah, all right, Taco Man. We'll see what happens.
Don't start on China next.
We'll see. Yeah, but I mean, he's been long talking about that anyway, right? The kind of drug prices being forced down. That's typically maybe bad for share prices, but we'd argue good for humanity.
Yeah. But as long as he's quiet about it, you think he's forgotten it, and then boom, he just randomly throws it out there when he's got nothing else to say. Airbus up 1.7, L'Oreal up 80 basis points, Air France, and then our friend Gucci. God, they must have seen you in your Burberry. Hey?
Up 0.5% there. Rheinmetall up 0.8. That defence move continuing. God, what a trend that's been. European defence plays. That has been the one of the moves of the year. So not long may that continue. Hopefully, we hope for peace. But if you're looking for a way to express it, look at European defence plays.
And Adidas, it happened off 4% the other day when I was off, but back below 200. So that's what we've been speaking about for a while. The Campus, the Spezials, and the Sambas are they're all done. The fashion's gone.
What are you rocking today?
I'm on the old Cortez.
Oh, the old Cortez, but you are the Nike man.
Back to the Nikes, back to the winners.
I'm rocking a small Spanish brand called Pompeii.
You're back
when I was in Madrid back in the autumn last year.
Yeah, I don't know. I'm not sure if the fashion will boil over on that one.
They're pretty good. I mean, they haven't got any shops in London though, so I feel like I'm a bit of a trend setter. Clearly, because you just look at my jacket that I want to buy.
Yeah. See, you never know; it might erupt.
Well, yeah.
So Louis Vuitton up 20 basis points, 461. And that's it. Any losers in Europe to speak of? Not really. What a dull morning.
In the UK, let's see how we spoke about PZ Cussons, not a particularly popular name, I must admit, but they're up 3.3% on the back of those numbers. Speedy Hire, for those that want something to be hired, they're still in an auction, down 4%. So their revenue was down around 9 million. Still confident of achieving full-year expectations, so they say, but I imagine that is a big miss because the market was originally calling it down to open 10 and it's now indicating down 4.
Oof.
So speedy higher. Trying to think of something you could say about that.
God, you're just not quick enough.
No, just not quick enough, clearly. Oh, come on.
I'll take that one.
Yeah,
that
I need a coffee.
That gets Carl Anderson back. What do you see? What's coming up on the chat there?
What's that?
So he goes, maybe Luke just looks so good because he's compared to Rich. So nice welcome back, isn't it?
Oh, wow.
Thank you, Carl. Love you as well.
Let's go, Carl.
Right,
I always knew we could be friends.
There's you. That's your ticket for Friday night rescinded. Right, there's our currencies then, up 30 basis points on the GBP on the back of that inflation data.
Smarter Web actually just on up a measly 2 off the back of that Jesse announcement, just hovering around £3, just to let you know, because I saw it on the corner of your screen just there.
Yeah, that's right. There it is. Let's see. And then, Oz for the wider indices. FTSE up 13 basis points as it was predicted. And not seeing too much change in the futures there either. Good. Right.
We'll see how that goes.
We've got, so a reminder, if you're not signed up for Friday evening and you want to come along, it really is, it's going to be a big one. There's 750 people signed up.
Nice.
So that is big. We're thinking, there could be 500 turn up.
What's capacity?
Capacity is 1,000.
Oh, right, okay, fine.
Yeah.
So we can get people in. They can all fit.
They can all fit, and but that is a big drinks bill.
You.
Yes. Wasn't quite thinking we were gonna, have that many boys to have a glass of vino with.
Yeah. I tell you what, one thing I've learned from chatting to my friends over in Chicago is that Tom, little insider story here. Tom is very good at looking after all the staff with lunch. So I think it's either 1 or 2 days a week. Lunch is laid on. Everything's there. So if he's in the office today, fingers crossed, someone's rolling the red carpet out for him and getting a bit.
Might be a bit early. Friday, more likely.
What time's he getting in today?
Probably about midday.
Right. Okay. Gotcha.
Yeah.
Okay. Yeah. Well, if he'll be in the air then, won't he, right now? Probably.
Yeah. No, they've landed.
Oh, they have landed.
Yeah.
Okay. Well, if you're listening, Tom, we look forward to lunch.
Right. Speaking of tasty, what have I got on at the moment? Well, I've got a whole heap of Nike on. Talking about my Cortez. So we've I had to roll some stuff over the was it Friday or Monday? Mm-hmm. And so now, I am short 4 of the 57.5 puts for July. Because this incorporates the next set of numbers, right? Next set of numbers are in a couple of weeks' time. Mm-hmm. So I am short those. I've also got a very small call ratio on, 62.5 to 67.5. So that's expecting numbers just to give a little bump up, but not too much.
And it's trading just a shade under $60 at the moment.
Yeah, spot on 60.
Just a shade under $60, 59.98, as you can see at the top of your screenshot there. There you go. Interesting.
So that's the short-term stuff. And that's me. And then a little bit still on NVIDIA. Quite like this trade. That one's worthless. Got to close that today. Mm-hmm. But then in October, we're still short the 85s and the 100s on the put side. But also short the 170 calls.
Bit of a ratio strangle going on. Yeah.
Well, it was the original strangle, but then as it got up, I thought sell the 100s as well.
Yeah, like it.
And then finally in Palantir, I'm just short the 160 calls there for August.
Is that a little trade on DJT as well?
Yeah, that was just for them signing up the
crypto
changing
stuff.
into the
crypto.
He hasn't announced it yet.
Well, I saw that they are going to do a crypto ETF. There's going to be a Trump crypto and Ether ETF, I believe, which will be interesting. Not sure what their USP is.
But he's raised $1.5 billion to buy Bitcoin and then hasn't announced any Bitcoin purchase.
Who's he hired to do the purchasing?
Bizarre.
That's why would I know? Who's his team? It'd be interesting to see whether they're going to try and trade their way into it. I mean, Bitcoin's been around this kind of 105 level now. For a little while, it's gone up a little bit, it's come back down a little bit, but it's steadied off. You know, the vol's really come out of it. So you've got the ability to add, you know, at a decent market price, I think. It's at a steady level. It's interesting how correlated Bitcoin is to the M2 money supply, though. You know, it kind of lags it by a few months.
Yeah.
M2 money supply has been increasing recently. So, you know, is that a leading indicator for Bitcoin?
It does. It tried to obviously break out on Monday. It looked like it was going to go. And then smackdown yesterday, it lost everything it gained. So we're stuck at that 105 level again, aren't we?
We are indeed.
105,000. But yeah, Monkey Man, seeing that Trump is launching a phone.
Oh yeah, what's that about?
Well, it's the next big thing. You know, you want to be a phone operator.
Because of domestic production, because he can write the rules and force people to build. And who owns the factory in the US? Oh, it's Trump. Bizarre. Yeah. Bizarre. Yeah, I mean, he's never done anything by the book, as you can see by his G7 performance yesterday. You know, he was only there for an hour.
G6.
Now like a G6.
Well, he was back on the G6.
Like a G6. Yeah. Yeah, slightly embarrassing everyone else that was there, I think. You know, turning up for the photo.
Shambles.
Turning up for the photo, taking control of the press conference and then leaving.
Do you see the little joke between Carney and Macron?
Go on.
They're pretty disrespectful, actually.
What are they?
So Trump was speaking and Carney was kind of just giving Macron a wink, as in,
I told you so.
Yeah.
Yeah, there you go.
Right, we will be back in 2 short minutes to do our latest round of fast markets.
See you in a sec.
If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show's finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
This is a huge moment for IG and a major milestone in the UK's crypto journey, with retail investors now able to buy, sell and hold 35 crypto assets with a grown-up business. Adoption is rapidly growing, and with UK crypto regulation gathering steam, we want to give existing and future investors a platform where they can trade crypto with clear and transparent fees with a provider already used by hundreds of thousands of retail investors. With the addition of crypto, our customers will enjoy a more streamlined investing experience, with IG now providing a one-stop shop for a wide range of assets. We're really excited to bring this crypto offer to the market.
right, we're going to start off with a very special Fed Day preview of what we think about tonight. And yeah, we've got a little bit of material to go off, don't we?
We do indeed, yeah. Axel, who's going to be in later talking about his crypto update, has written an article that he published on Monday that you can get from our website. And so he is saying that we think we're going to be cautious. He specifically calls out that the inflation dynamics are going to support the current policy stance, if I can get my words out, which is what we already mentioned. You know, unless that inflation picture changes, let me try and centralize that so it doesn't look as bad. Unless the inflation story changes, I don't think there's going to be any changes immediately.
It's one of the easiest meetings because he just has to say nothing.
Yeah, yeah.
And he has to talk about geopolitical danger. He has to talk about risks even,
Yep.
and being data dependent. And that's it really.
Well, that's all they've been saying for the past 4 years. Really? Well, it's all they've been saying in the last couple of years. It goes back to what we were saying there, though. So it looks like by the end of the year, we're still going to get 2 cuts at the moment. So it's going to end up, because you can see here, the way to read this is on the Fed Watch tool, the CME Fed Watch tool, which Rich put on the screen earlier, or you can go on this article, is the blue color here, is it shows you on what date the percentages, on what meeting the percentage likelihood is that that the rate is going to be within this range. So there's a 54% chance in September that there's a cut down to 4 to 4.25, and then a 40% chance that the range is going to be in the 3.75 to 4 by December. And that roughly tracks, inflation expectations. It roughly tracks everything that's coming on. But you're right. What are they waiting in data from? Inflation, the impact of tariffs, the impact of, in December, it's when Percent is supposedly going to be announcing a lot more in the way of regulation cuts. So hopefully you're going to get that GDP boost around that level.
Positive, that is.
Big positive. And we've already seen that tariff income is increasing hugely. They've never made more money in terms of tariffs. So that is slightly playing into that hand. However, if you get this deregulation cut, if you get an upgrade to GDP that we were talking about earlier, and you get a cut in rates, does it give you a bit of a Goldilocks scenario later on in the year? If things start to deteriorate, if things start to deteriorate from here where we are.
And the question is how much of that is already priced in as well.
Well, you'd argue pretty much all of it, given the fact that there's a war and we're still at 6,000 on the S&P, right? So this is all in the price.
Yeah. And it all comes down to, the tariffs, the AI story, and the US consumer. So we're not seeing any slowdown in US consumer yet, right? We're small in the retail sales yesterday.
I'd say that's a decent downtick in the retail sales. The market was looking for a 0.1% reduction, and it got
0.4, and it was 0.7.
That must have been at the core.
So 0.1 was last month.
It was definitely 0.9 yesterday, month on month.
Yeah, and it was expected 0.7.
Right. So either way, you're starting to see that come through. And I think when the US consumer starts to wobble, that doesn't bode well.
That's what results in job losses.
Yeah.
And then we start to get that momentum lower. So, all right, Boise's request is to look at SWC. Monkey Man looking at Nike. So let's do both of those for you. Smarter Web, we'll start with. The last time they announced the Bitcoin holdings, 242, with a total average purchase price of 79. So that is our latest update. Then they did a fundraise of 29 million. So his MNAV is 20 million, and I think he had another 6 from that round, plus the 29. So that gives him 35 million of cash. So all in all, that's enough to get to 700 Bitcoin.
And so they've got 242.
So, yeah, but just for the MNAV, you take 700.
Right, okay.
So then we're talking 700,000, and the price is currently, what about
£3?
What were we on?
We are 295 offered. 280 to 295.
No, sorry, in Bitcoin.
Oh, the Bitcoin price.
105,000 divided by 1.347 is 78,000. So 700 times 78,000 pounds is, his MNAV is 54 million sterling. Now, the amount of new shares as of this Thursday is 220 million shares. All right. So you have to take 220 million shares multiplied by £2.90.
£2.95.
£2.95 is 649. So all in all, you're talking about an MNAV premium of 649 million of market cap divided by 54 million of MNAV, which is 12 times. 12 times for me is rich.
Right.
And I think it was obviously great that they managed to get listed on the US market.
On the OTC market.
But the Americans do tend to get a little bit excited by these things. So, you know, now we've got to start thinking, right, what is priced in? What's priced in at 12 times the MNAV? Well, his last few raisings have been, I think it was 9, and then 17 or 18 million, and then 29 million.
It was the big one last week, wasn't it?
That was big. That was much bigger than I expected, so I can understand why the stock went up. But let's say he does another one of 30 million, and then a subsequent one of, well, he's gone bigger every time, so then you've got to start thinking 50.
40, 50?
So shall we put a 45? Let's put a 45 in. So that's 75 million additional raisings in the next
however many days.
Month, right? So we add 75 million to the MNAV of 54, and that would take us to 129 million of MNAV, and the share price would dilute by about 13%. So you have 13% more shares. So 220 million plus 13% is 27, about 250 million. So 250 million shares. So then you're talking a market cap of 295 times 250 million.
295 times 250 million shares. So the market cap on it at the moment is 590 million. So that puts it up to what, 700 odd?
737.
That would be a 30% increase from here.
30% increase on the market cap.
Market cap, yeah.
But then divided by the new MNAV, which would be 129, and you're only talking about a 6 times MNAV, which is what, you know, I'm relatively comfortable at.
But we're trading 12 at the moment.
Because it's trading at 12, because it's pricing in
new raises
between 1 and 2 more raises.
Right.
So, you know, that's
Yeah, Boise, I don't know if you saw my face while I was sitting here. I'm trying to keep a track of all these numbers.
That's the kind of thing that you have to now expect to be buying the share at 295. Now, personally, I'd be sitting more at like 250, because 250 takes you down to, you know, more like, what's that, 9 times? A 9 times MNAV, or 9 to 10. And you're not saying, okay, he's got to raise 30 and then he's got to raise 45. Because that's, you know, that's tough going.
Is there a chance, throw a fly in the ointment, you've got now a little kind of grouping of companies that are doing very similar things? So to call out Coincilium.
A lot of them.
To call out Helium Ventures.
Yeah.
To call out another one that we broke this week.
Tau, is it?
Tau seems fairly recent, although I'm not sure they're doing exactly the same thing. There's another one, Vault Ventures.
Yeah.
There's now
that's on Ethereum, isn't it?
Yeah, yeah.
don't think that works.
And I think Tau's something to do with Solana as well. So there's bits and pieces that are doing different things. But you've now got a collection of companies that are all doing similar things. So does the hot money regardless of share price, MNAV, and everything that you've just mentioned, hot money stuff that we're seeing from a retail perspective, does it just allocate, not necessarily allocate away from Smarter Web, but does it say, right, okay, there's better opportunities on a Coincillium, Volt, or one of these other companies, and actually you see the flow go that way?
I think that's the same conversation as people who were buying Nvidia and then said, right, I'm going to sell my Nvidia and buy AMD.
Yeah.
Right? Why would you deviate from the company that has got that UTXO relationship? You know, because that's the one that's proved through Metaplanet that it can get up to 5 billion. So, you know, that's Andrew McKelvey pointing out Chessie chipped in $1 million in the last raise. Wow.
Very
It'd
good.
be nice to have
Skin in
that
the
kind
game.
of, yeah.
Well, yeah, also if it gets back down to 180, there's your floor. You know, there's the level to look at.
And Boyce, you're right. So yeah, people might want it back to £2.50, but then if you're buying and holding for the long term, but remember, it's this is circular, because if let's say the stock goes to £3.50, then it's trading on 15 times its MNAV. That's pretty hard to go and raise 30 million, 50 million at that price, because he doesn't, remember, he hasn't raised at a discount before. He only ever raises at the closing price. So it makes it harder.
That would be the kind of, not necessarily an unraveling, but he won't. He says, from memory in the interview, he said he will never try to raise at a discount. He just won't do it. But if he does, because the market pressures force him into it because of the current valuation on the company, does that bode well or does it not bode well? Well, you know, we'll have to see.
Or is there another answer? You know, is there another way
To start to do something similar, do you spin into an ether or a different currency to start doing something like that?
Oh God, no. I'm talking more like doing converts.
Oh, so you start going down the debt.
Yeah, no, he will not move away from Bitcoin.
Right. Oof. Interesting.
So yeah, so it's really interesting. And
Boyce, you know, they tend not to set dates for the raise. They tend to just happen, and you wake up one day and you've seen the RNS.
yeah, or no, that it gets announced at about 4:35, 4:40 p.m. and then you know, that's the race takes place until 9 p.m. at night, and then announced the next morning.
But these things have been massively oversubscribed. So there was some retail raises done on Volt yesterday, hugely oversubscribed. That raising was supposed to stay open from Monday through till Friday, and the company pulled the plug yesterday lunchtime, said it had raised enough money. In fact, it doubled the subscription. Coincillium was another one. So there is a huge appetite for these names at the moment.
And I think the more that come out of the woodwork and more that do this brings you closer to the end point.
Yeah, that was my point.
You get maybe, because there's with these there is such a big risk of a down 50% day.
Yeah.
So these, you know, you've got to put on with a lot of risk warning and a lot of chances that you know, when people talk about you could lose a significant portion of your capital, this is it. This is probably one of the biggest.
Yeah, because it's you're trading on a mathematical structure. Basically, with this MNAV conversation, you're not correlated to the price of Bitcoin at these levels. And so you're buying something that's uncorrelated to the price of the underlying, that requires continuous raisings and continuous demand for the product. And
if your share price goes too high, the demand for the raise drops.
Reduces.
So it's
the ultimate kind of momentum play, isn't it? You know, if the momentum does start to slow, and the hot money starts to look elsewhere for everything else.
No, I don't think it's that, because guys have been in strategy forever, right? So you've got your core base, but it's this idea of taking the stock too high before.
So you think if it pulls back a little bit, people will be more comfortable raising at lower levels, but you've got to rely on the stock to come down, as opposed to doing it at a discount.
Yeah.
Interesting. I'll tell you what, it's interesting just for the wider kind of small cap market in the UK. So I've had more calls in the past 2 weeks about UK small caps than I have, I think, in the last 2 years.
Brilliant.
Genuinely.
Yeah.
Because, of course, the UK small caps had this huge run during COVID. There was a huge run on pharma names, on vaccine names. There was just loads of small projects that were just taking off.
Yeah.
Placings were happening all over the place, and there was loads of money being raised, and then it just died. And I've seen clients that would be speaking to me about tiny little companies, really interesting little resource projects. They've just not traded them for 2 years, 3 years, potentially even 4. And it seems like that tide is starting to turn a little bit. We're starting to see a bit more interest. Some clients that I haven't spoken to in a while just say, right, are you offering coverage on this stock? So there's a bit more coming back, which I think is good for the UK market, because the UK market's, as we've spoken about several times on this show, good quality assets are just being taken private and swallowed up by US or private equity. It needs some runners.
Yeah.
It needs some of these small caps to run, because it gives people more confidence to try
And I know in this Nick Feingold chat, the group that for the curation group, my goodness, the amount of knowledge in there for the small cap, mid cap
it's huge.
world is just incredible. Right, Nike, keep Monkey Man happy. That is all my mantra always. Look at that. There's our long-term chart, which is horrific. So let's take that back in and down to probably the last couple of quarters.
Looking very nicely like a Nike tick, that wasn't it? If you flip it around, the old Travis Scott version of the Nike tick, which they reverse it on his dunks.
So here we go. What do we think of Nike going into numbers on the 28th of June? Well, unfortunately, he's in a bit of a difficult place, isn't he? Because he's it's outside of his control at the moment. Of course, I'm talking about Elliott Hill. Tariffs are just a little bit too complex an issue. I don't think they're going away anytime soon. So to be able to put forward any real strong guidance is going to be tricky.
Yeah, I think if you look at the, I'll pop. If you just click onto the tip ranks actually while you're up there, just so we can see what the market is saying. If you pop onto the analyst consensus, you'll see that can you zoom in on those? You're getting a lot of maintenance. So you look at all the different dates, June. If you scroll back, no one is changing their tone on it just yet. In fact, you've got to go back to April for Deutsche Bank to look at a previous upgrade. Everybody's reiterating, everybody's offering maintenance. Yeah. No one's showing their hand when it comes to Nike because of the question mark that is surrounding tariffs and their supply chain.
Yeah, and I think those price targets are right. The 6 days to the 72, I think that's how it trades for the next 6 months. $60 to $72, and I don't think you get another warning because I think he kitchen sinked it in the last set of numbers.
Yeah.
You'll start to see the green shoots. That'll be enough for it to be up 5%, but then he can't give any guidance.
No. Unless you start to see some walkbacks, on these tariffs, that would be the catalyst. If all of a sudden, where's their supply chain? Is it Vietnam?
Yeah.
So if they get some reprise on that, or you get some trade deals getting done, then you start to see them moving around.
I think we're too busy blowing up Iran to do any trade deals, unfortunately. So
careful on the word we.
It's another excuse.
Yeah, not us yet. Yeah. Well, let's have a look.
Right, it's time for charting crypto.
Exciting. See you later.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
This is a huge moment for IG and a major milestone in the UK's crypto journey, with retail investors now able to buy, sell and hold 35 crypto assets with a grown-up business. Adoption is rapidly growing, and with UK crypto regulation gathering steam, we want to give existing and future investors a platform where they can trade crypto with clear and transparent fees with a provider already used by hundreds of thousands of retail investors. With the addition of crypto, our customers will enjoy a more streamlined investing experience, with IG now providing a one-stop shop for a wide range of assets. We're really excited to bring this crypto offer to the market.
If you're looking for flexible ways to trade financial markets, Whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show's finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Hello and welcome to Charting Crypto, our new show where we look at cryptocurrencies from a technical perspective. So let's begin with the biggest one of them all, which is Bitcoin. So if we look at the daily chart, what we can see here is that we've been consolidating over the last few weeks, really. But overall, we are still heading higher, as you can see here. Let me just increase the sound from the studio. Let me just make this smaller here. And what we can see is basically two lines that I've got on here, which are my 55-day simple moving average. As you know, I prefer the 55-day simple moving average on any chart compared to the 50 period, which most people use, but it doesn't really matter. For me, it's just an additional tool which sometimes acts as support. And interestingly enough, with regards to Bitcoin, yesterday it did act as support, and you know, a few days ago on the 13th of June, on Friday of last week, it sort of also held above there. But what can we actually see? Well, we've had a nice uptrend going up from, you know, the Trump so-called Liberation Day lows all the way up to our May high here at $111,965 per Bitcoin. But right now, what we're seeing is a consolidation phase. And it looked as if that consolidation phase between May and June was over as we saw this 4-day advance here. But then we've come off again. So basically, this leads me to believe that at least in the short term, what we're seeing here is a sideways trading range. And what is interesting also is that the volatility, even though we've seen heightened tension in the Middle East and the oil price, for example, rallying very, very strongly, equity markets coming off with regards to some markets like European DAX or something like that, the German stock market a bit, but actually not really reacting that much. And US markets being, you know, very stable as well. And you can see the same reflection here with Bitcoin. So as we see more and more institutional investors adapt Bitcoin, also invest in Bitcoin, we can see that the volatility, at least in the short term, seems to be then taken out of Bitcoin, as you can see here. So what can we see? Basically, for me, technically speaking, what I always look at, as you know, is that, you know, what is the trend actually telling us on the daily charts? And what we can now see is a series of lower highs, these here, and at the same time higher lows. So clearly we're in a sideways trading range, because usually what we have in an uptrend is higher highs and higher lows, and a downtrend lower lows and lower highs. But here we're just in a sideways trading range. So if you want to invest in Bitcoin, what you're doing is investing perhaps into a retracement in a long-term uptrend, because if you go and look at the monthly chart, you will see that we are towards the highs. This is the Bitcoin price on the monthly chart. And we'll get back to that later on, because you can see up here I've got some nice targets. And I've written an article on Bitcoin on future upside targets on the IG website. And I'm going to write another one probably tomorrow. So keep a lookout for that. And in tomorrow's, I'll look at these long-term upside targets. But before we get to them, as you can see here, we are basically heading towards, we are trading very close to our all-time high at, as I said, just below $112,000. So from an investment point of view, you would be at the moment investing towards the highs. But then again, the movement is towards the highs, as you can see. And what we're seeing is just a consolidation. So it really depends on your outlook, what you want to do in case you want to invest in Bitcoin. But from a technical perspective, from the short-term trend perspective, what we're seeing, as I said, is a sideways trading range from our all-time high, which was made on the 22nd of May. And if we stay above the last important reaction low, you know that I like to look at reaction lows. And reaction lows are simply lows on the daily candlestick chart, which are lower than the day before or the day after. So we had a reaction low here on the 13th of June, because that's below the low from the previous day and the next day. But that one, as you can see, led to a very minor move. The next lower reaction low, this one here, was the end of this downward trending phase, which was then followed by a 4-day upward trending phase. So that's far more important technically, because more movement happened after that low and before that low. So for me, that one is the line in the sand. So as long as Bitcoin stays above that $100,430 low, we are just trading in a sideways trading phase with a medium-term uptrend still being in play. Now, if we were to fall through that low, we may very well not just retest the high seen at the beginning of May. That high was made at $97,921, but probably also probe here this red line, the 200-day simple moving average at $95,847. And that, as you can see here, is in the middle of this previous support area. So what we saw back in late April, early May, which is a sideways consolidation phase, we were sort of grinding higher, and then all of a sudden we got another up leg. And this sort of thing can still happen, obviously, over the next few days. But right now we're just trading sideways. So the bearish scenario for Bitcoin short term would probably start if we were to fall below that $100,430 low of the 5th of June low here. Bullish scenario, well, let's look at the last relative high that was made on Monday of this week. But again, can you see it was a little consolidation phase heading into the high, and then yesterday we came off again. So really not much happening here. But if you go further to the left, this high going back to the 9th of June had 4 consecutive days of rising prices, and quite significant rising prices, and then a reversal to the downside of 4 days of falling prices. So this high here is more important. And that was made on the 9th of June at $110,000 and $617,000. And if we were to take that one out, it's very likely we would take out this all-time high again. And then what's our next upside target? How can we know when markets are trading in all-time highs where they might go to? And for this, technical analysis can be extremely powerful. And what we do is we look at Fibonacci extensions. So let me just go back to the monthly chart, and we can see on the monthly chart that I've got these horizontal lines up there. Now, they're not precise. I've actually calculated these levels exactly. And I think I've got my 161.8 Fibonacci extension at $122,022, I believe. and not, as it says on here, 69, because these are just drawn manually on this trading view chart. But you might ask me, how on earth do I come up with this upside target? Well, what you do is you take a relevant uptrend, a big relevant uptrend, and then you take a bear market or a correction against that trend from where you measure the movement to the upside. So what I'm doing here, for example, to get my first upside target here, the 161.8 Fibonacci extension, and that basically is based on the golden number, the golden ratio. So what you're doing, you're taking a move from a low. So for example, I think I took it from a low going back a long way. Let me just see where this is. I took it from the February 2019 low. So let's go into this one. So we had a bull market here on these monthly chart, then we had a decline. Then the low of that decline, that's the start of the new bull market that we saw between February 2019 and then the high seen in November of 2021. So that's our up move. Now, why didn't I take this high here? I could have done, but since that high here in November 2021 was marginally above the April 2021 high, that's the highest point. So that's the one I'm taking as a reference point. So you take that low here to this high here, that's the bull market, which was then followed by a sell-off from the November 2021 high at $68,997 all the way down to the low seen in November of 2022 at $15,474. So we take the distance from our February 2019 low to the high seen in November 2021. And then from the low of the counter trend move from the November 2022 low at 15,474, we project the previous up move from 2019 to 2021 to the upside. And then we've got the 100%, and then we've got the 161.8%. The Fibonacci extension is the 161.8% target. So basically that 161.8 target, this distance from down here, from the November 2022 low to this high here, is basically 168.1 extension of that move from here to there. So this distance here is projected higher from that low here and multiplied by 1.618, which gives you this upside target. So for me, Bitcoin has a longer term upside target at $122,022. So that's my next upside target. And if we were to take that one out, we have another one which is not that far above, and that one comes in at $143,500 or so. So that's the next upside target. How did we get this one? Well, what we did is, okay, we said that that move here concluded, the downward move concluded this uptrend. So from here, we started our current uptrend. And that current uptrend, you could also look and say, oh, actually, we had an uptrend going from the November 2022 low all the way up to the March 2024 high. And then we had a corrective move down, basically from March 2024, from $73,757 all the way down to the low in August in 2024 at $49,217. So since that is a correction here to this up move, what you can do is you just take that as your projection point, the low, the counter trend move low, basically. So you've got the distance from the November 2022 low at 15,174 to the high on the March 2024 at 73,757. Take that distance and project it higher from the low seen in August in 2024 at 49,217. And then you multiply that first distance here by 1.618, and that gives you the upside target here at $143,500 or so. So these are the long-term upside targets for Bitcoin. Now, we don't know whether they will get hit. We just have a technical sign that at some stage in the future, these levels will get hit based on the Fibonacci extensions. And as I said, we don't know what's going to happen in the meantime. So we could, for example, see a top forming here. I mean, it's a possibility. We saw it back in November of 2021. So we made a marginally higher high, and then suddenly the trend reversed. So here it's possible that we could form a top and the trend then could take us down again. But for a top to be formed, we would have to fall through the last reaction low, and that was the April low of this year. And that was made at $74,441. So it's a long, long way away. So only a fall through here would then lead to potentially a move down towards, again, this sort of 50,000 area. But interestingly enough, what we're seeing here also, can you see that the low in April of 2025 was made marginally above the high in March of 2024. So previous highs in the future act as support, and previous lows can act as resistance. So right now, as you can see here, we've had 2 consecutive months of rising prices with regards to Bitcoin. We currently are just sideways trading, as you can see here on the daily, on the monthly chart. If you go then onto the weekly chart, what we can see is, from a technical perspective, that we've had 8 or 7 consecutive weeks of rising prices, and now we're just struggling at this previous resistance area, because basically the high we made in May was just marginally above the highs we saw in December and January of this year. So we're just trading sideways. And then, as I said, on the daily chart, for me, purely technically speaking, and I'm not giving any trading advice, I'm not giving any investment advice, I'm just talking about the chart, the actual data that anybody can look at here, which is represented graphically. You can see here that as long as we stay above that reaction low on the 5th of June at $100,000 and $431,000, the sideways trading trend remains in play, and the medium-term uptrend also remains in play. If that level here were to be fallen through, it's possible that we could see a consolidation take us towards the 200-day simply moving average. If we were to rise above the 9th of June high, above $110,617, then perhaps we could go above the May high and then target our Fibonacci extension target, the 161.8 Fibonacci extension target at basically $122,022. And as I said before, I've written an article on some of this. It's on the IG website. You can have a look at that. And I'm going to write another one tomorrow, so look out for that, on these Fibonacci extension targets and how I calculated those exactly, so you can have a look at those. And actually, do you know what? I can write that article today. So look out for that article. It's probably going to be published on the IG website later on today, in the afternoon at some stage. And yes, you can look at this, and then hopefully you can join me again next Wednesday at 8:30ish for charting crypto. And we'll look at some other cryptocurrencies such as Ether, for example, or Cardano, Solana, and so forth. Thanks for watching.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show is finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
There are certain things in our daily lives that everyone has a view on, like your favorite clothing brands, supermarkets, or even which airlines to fly with. Maybe you're loyal to EasyJet and you think British Airways seats are too expensive. Or you'll never shop at Tesco's again because Marks & Spencer's food offering has won you over. Now, what if you could use these views to try and spot opportunities in the markets? Let's talk about pair trading. It's a way to trade that focuses on the share price relationship between two similar stocks rather than taking a view on the market as a whole. Here's how it works. Take Nike and Adidas, for example. Now, some people think that Nike has gone out of fashion recently, but maybe you believe in a brand recovery over the medium term. On the other hand, Adidas Samba and Spezial shoes have been incredibly popular recently. But have sales peaked with this trend? As a trader, you could go long on Nike, expecting its share price to rebound over the coming months. Also, alongside that, you could go short on Adidas, expecting it to cool off after its big run in the last 12 months. It all depends on how you would like to express your own personal view on two companies. But keep in mind how quickly trends can shift. Remember when Under Armour rose to popularity fast, along with its share price. But then they spent most of their profits on celebrity partnerships and their share price performance flopped. Now, this doesn't just apply to clothing brands. Think of Tesco's and Sainsbury's in the supermarket space. Two companies that often move together. Now, if one outperforms the other unexpectedly, pair trading could let you capitalize on what could be a short-term difference. Because the beauty of pair trading is that it's market neutral. If the whole market drops, as long as the gap between your chosen pair narrows, you could still see an opportunity. But don't forget, always research why prices are diverging so you're not caught out by unexpected trends or their financial results. Do you want to give pair trading a try? Start simple. Test it out on a demo account first. It's a great way to learn the strategy without taking on real risk. And on IG's platform, you can explore similar trades easily with access to the tools that you need and further education on the IG Academy.
This is a huge moment for IG and a major milestone in the UK's crypto journey, with retail investors now able to buy, sell and hold 35 crypto assets with a grown-up business. Adoption is rapidly growing, and with UK crypto regulation gathering steam, we want to give existing and future investors a platform where they can trade crypto with clear and transparent fees with a provider already used by hundreds of thousands of retail investors. With the addition of crypto, our customers will enjoy a more streamlined investing experience, with IG now providing a one-stop shop for a wide range of assets. We're really excited to bring this crypto offer to the market.
Hey, trader fans, welcome back. And we are counting down to the opening bell for all sessions right now. Let's just get you across the markets to remind you of where we are today, 18th of June. We've got European stocks just looking across there, pretty much slightly coming back now. And we are, of course, counting down to the Fed's monetary policy decision, although change is largely expected there. It's going to be what Jay Powell says about the future direction of monetary policy moves. Of course, all this happening as we've also got the Middle East tensions keeping investors nervous as well. Just checking in on the commodities space for you whilst we have this up. Oil still down there. I'm going to get that chart up for you, down around 0.5% there. Really, we're seeing the moves here coming after Trump shifted the tariff policy, which has caused turmoil. But really, it's also the uncertainty and tensions there over Iran-Israel, which has rocked the oil markets after new missile strikes were launched at each other. This is despite Trump calling for Tehran's unconditional surrender. Lots of impact on this, not just in the commodities space. We've also got the insurance sector and construction and material as well, now starting to bounce back a bit, although overall advances are tempered by these declines in the heavyweight healthcare sector. Right, how much time have we got to go, gallery? 20 seconds to go. Just checking in on Airbus as well. Airbus was moving quite rapidly earlier. Let's go with the French shares first, whacking that up on the chart for you there. Airbus, this is .pa gaining 1.7%, but it's now up 3.5%. Right? All sessions, we're off to the races. Right, here we go. We've got my watch list up here. Let's get the all sessions up, and we should have the shares now starting to shake out. And here we have it. Let's pull up the losers first. We've got Beyond Meat, top of the losers board there, down 1.5%. BioNTech is also lower, down 1% there, almost 1%. And a lot of the names related to airlines, especially the ones that are exposed, if you like, to long haul. Remember, we talked about this with Matt Arber. The EasyJets, the Ryanairs, all those that are more exposed to short haul and, you know, within the regions, probably not as affected as much as those that have to fly across the Middle East, and if they service the US to Asia route, this might be the case. And so United Airlines down 2/3% there. JD.com and Pinduoduo, PDD, some of the consumer names they're also down today early on in the all sessions. Walt Disney, United Health, keeping an eye on that. United Health is down 0.5% there. And we are going to switch over to the winners board there. We have Affirm Holdings up 0.5%. Affirm, though, has had a bit of a clobbering of late. Ocugen up almost 2% there. And Plug Power, we talked about this with peers yesterday. Plug Power is up almost 2% there. Now remember, Plug Power is very, very volatile. So keep this in mind if you are trading this stock. ASML also up 1% there, the one that we were saying looking slightly unloved, but actually today it's getting a bit of loving there. This is the US listed shares of ASML. This is, of course, the chip gear maker. And looking across the board there, we also have Walmart up slightly, but not by much. So overall, just having a look at the indices again, we are seeing a slight risk on day here, but not by much. Just this is probably a coming or bounce back from the session that we saw earlier. Of course, investors not wanting to take big positions ahead of the Fed policy meeting, where everyone's going to be waiting on that wonderful geek moment. If you're like Rich, you've probably got your lasagna already in the fridge ready to go to listen to JP's speech. And also, don't forget, it's all about the dot plots. Right, so we've got quite a few movers on the European side. Producer Phil, have I got time to get our viewers across that as well? Fantastic. We've got 2 minutes to go. So lots of movers, trader friends. Let's have a look at Sodexo. Sodexo is down 2.6% there, as you can see. And also the other one I want to show you is Lottomatica. This is the Italian company. Not very many people trade this, but it is up at the moment. Can't get it up on here for some reason. Interesting. Those of you who can get Lottomatica, it's up due to its buyback program. Another one that is a big mover, lots of momentum here, Ocado. It was moving earlier, up some 4%, but it's now gone back down again. But the move earlier was due to the company's plans of a new robotic warehouse in Spain. And whilst we're in the sector, let's have a look at AO World, because Pete Ward, if you are listening, all those fridges that you ordered seem to have had an impact on AO World, because AO World, its shares are currently moving there. Let's have a look, down some 3% there. This probably is a bit of profit taking. Let's have a look at the hourly chart there. Because it had that move higher, because its profit, annual profit, did pretty well. I think it was up some 27%. So that could potentially just be a move lower after investors have decided to take profits. Another one that is on our radar here, which I had earlier on cross my screen as a big momentum move, Oxford Metrics. Oxford Metrics here, showing you the hourly chart to show that move there. It is down more than 6%. In fact, 6.7% now. There we go, showing you the big drop there. This is after the company said that several pipeline opportunities are being cancelled or delayed beyond the current financial year because of recent US policy changes and cuts in grants and funding. Right, thanks, and don't go away because we have much more to come. We have a Q&A. We're going to grab producer Phil. We're going to bring him in here with Rich and myself. We're going to go through some of the questions that you guys have asked during the week. And I'm also going to ask you who is going to come on Friday, because it'd be great to see some of you in person.
Bring me the next shiny new thing. Bring me the next shiny new thing.
So today we're on set filming our latest ad campaign for IG Invest. IG Invest is the latest innovation from IG. It's aimed at those who are interested in investing or maybe have a bit of knowledge but want to become more experienced. And what we've done is created a really beautiful, easy to use app, and now we've got to publicise it, and that's what we're doing today and trying to capture. So we worked on this ad campaign with Otherway, who are our creative agency. And what we really wanted to do is think about breaking down the barriers to investing. And so we wanted to think of an idea that was playful, fun, but also inspired empowerment.
So essentially, look, a lot of financial advertising can be quite dry, a little bit kind of wallpapery. And I think the idea was just to create something that was really eye-catching and kind of use that distinctive IG red, but put it in this really interesting metaphorical space where investors felt really kind of calm and kind of very effortless in what they were doing.
So my work is colorful, it's poppy, it's quite surreal, and I think this is one of the projects that is a perfect match. It's really nice to have a company that's very brave in their approach, and I think as a creative, as a potential target audience of the whole thing, I think it's going to work very well.
There were too many people to name who've worked on this project. You know, at IG, it's really important that we move at pace whilst delivering really high quality work. So we've had to have the best brains in the business on this one, and we really hope that you like the result.
It's been a real pleasure working with IG. I think ultimately as a brand, they're really keen to push things and kind of take the financial kind of advertising space somewhere slightly more interesting. So it's been a real joy for us to work with them and help them kind of get there on their journey.
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Magic of television.
Here he is.
So remembering that we have a green studio, so we got a green screen. What colour is he? What colour has he worn for this?
And I produce the show.
He does.
So I put the segments in.
Apparently.
And I've decided to pick a shirt today. It's one of my favourite shirts. So I was like, I'll pick one of my favourite shirts.
Even his buttons are green. Even his buttons are green here.
You can tell that I'm not used to coming on the show. This is why I sit behind him.
Right, what's the meaning of this then?
Yeah.
Why have you
meaning of
pulled us into the headmaster's office, sir?
So, well, I thought it'd be interesting to do this together. Whereas I do it with Angeline occasionally. I do it with you occasionally when you're feeling okay and you're not faking man flu. So I thought it'd be good
the hot weather. He wanted to enjoy the hot weather.
Exactly, and the aircon works in here. And also, we've got an exciting show later where you guys are going on Tasty. You guys are we're doing a freeway in the studio for later as well. So this is a nice little kind of warm me up suggestion area because you guys have got a long day. So yes, I've got a few things that I wanted to discuss. But as always, this is a live Q&A. So if you do have any questions for Rich and Angeline that you want me to post to them, we'll go through them as well. But I'll get us started with, of course, Friday is going to be fun. You excited for it?
So excited. Right. So I've
Royal
had
Ascot.
Oh,
What's happening on Friday?
Nothing really.
over in Hackney, the biggest event of the year. Rich and Tom and Bat are going to be taking us through options trading live on Triple Witching Day.
So that's in the evening. But first of all, for you at home, for the guys that can't make it along to Hackney in the evening, we've got Tom and Bat live on the morning show. So we're not sure exactly how it's, Sosnov hasn't decided.
It's going to be fluid, right?
But
It's going to be fluid.
yeah, I think we get Soz in first thing in the morning to cover the news, and then maybe get Bat to ring the bell. But yeah, that's going to be a treat on Friday morning, and then into the big events.
That's the current plan. But the plan is, like you said, fluid, and I'm not going to overplan Friday. We also hit 1,000 subscribers, which...
Thank you, everyone. It was amazing. And I had Dylan looking at me like, what is this breaking news? All I heard in my ear was Phil going, breaking news, stop right now and look at the subscribers. I was thinking, Iran, Israel, what's happened?
More importantly, and we did it without you as well. It would have been good for you to be here.
I'm not even going to celebrate 1,000. Talk to me when we're at 3,000.
Well, you heard it here, guys.
We've got
like and subscribe.
We've got big ambitions, that's for sure. And anyone in the Discord, you will see that there's a feedback section. So basically, if you do have any feedbacks for the show, segments, obviously there's new segments, there's new things going on. This is basically for you guys as well. It's a community-based kind of project that we're doing, so we do want everyone's suggestions in. Might not listen to all of them, we might think otherwise, but I think it's definitely important to try and see what we can do for you all. So speaking of 1,000 subscribers, what I'm requesting, and I'm specifically looking at Monkey Man because this is definitely someone we want to try and get on, is we're looking to do very short form interviews, so to celebrate the community. So if you're willing to don't have to be filmed, it can be audio based, Monkey Man, if you don't want to share your face. But if you do want to do, basically be part of the 1,000 subscriber special little kind of advert we're going to pull together, then you can put in the Discord, you can ask at IG.com, you can personally message Rich McDonald's.
I think Boise's got a great idea. If you subscribed in the first 100, do you get a founder member badge or hat?
I think we can maybe work on something like that, but we'll have to look back at the YouTube. All three of us will probably be part of that club anyway. So we'll try. I mean, if you want to do a phone interview, Monkey Man, we'll take it. But yeah, if you do want to be part of that and you want to celebrate the community, then just reach out to the Discord / or ask@ig.com, and we'll talk about that.
Steve Davies, why are you not going on Friday? You can still fly to Milan the following week if you miss Friday, because Rich will be there.
For a glass of vino.
Yeah.
I'm not looking forward to that. No.
How's your Discord going? Are you behaving yourself in there? Maturing? Are you keeping things in line, in check?
He's doing very well.
How many people you got on there now?
There's more than 30 people in there now.
Wow, it's building.
And no one talks during the show, which thank you very much. I thought that'd need more managing.
We saw that, didn't we? We thought it was very civilized.
Everyone's very respectful and very civilized.
Who's had the best trade so far?
Maturin's done a lot in there, to be honest. He's suggesting a lot. He's definitely kind of leading the pack, but there's been a lot of suggestions in there. GGP was mentioned quite a few times. So yeah,
Yeah, I think Maturin's definitely done his bit for that, sure. And he is the server owner. So, right, I have got some studio updates as well.
Fantastic.
Nothing concrete yet, but just so people are aware and know what's going on with basically the show and what's going on behind the scenes. We are doing a bit of a revamp, so things will look a bit differently. Timelines are still very fluid. We are still looking at maybe end of July, early August. So
Do Rich and I get wardrobes?
you do not get wardrobes.
Do we get a makeup artist?
You do not get a makeup artist.
Come on, people. You know what to do on the chat.
We're spending
Say,
enough money on cameras.
get Rich and Angela wardrobes so we no longer have to wear Ralph Lauren. That wasn't planned, by the way. Ralph Lauren shirts that we already had prior to this.
Yeah, not sponsored by Ralph Lauren. So we have people coming in.
Hit us with it. What's the plans?
The current plan is that for about 2 weeks we'll have to do some kind of. At 2 weeks we'll have to do some kind of smaller show, and that will basically mean that this entire thing gets ripped out. We'll have a new background, we'll have new cameras, we'll have new lights.
So hang on, are we working from home here?
Absolutely
For
not.
2 weeks.
We'll have a temporary studio, which will do probably a shorter showing just to get us by, because of course
Is this in the server room?
it could be in the server room. It's not in the server room. But yeah, it's.
Is this going to be worth it? What's going to happen to the studio?
It's going to look
still going to look green?
It's not going to look green. There'll be a green area,
Ooh.
but it's not going to look green. We're going to have essentially shiny new things.
Ah.
But I don't want to say too much. I don't want to spoil it too much. But I'm just, things are happening, things are coming, which is exciting. So yeah, there's a lot of things going on behind the scenes, which is great.
New producer?
No new producer, but new Scottish anchor. That's for sure. That's getting in place.
What did you say, sorry?
Scottish anchor.
Also having a bit of tiff here. Boise's, Steve, Monkey Man, our community, Jesse, our Sax. Any of you have any ideas as to what you'd like to see in the new studio as well? Please, put it in the chat here because we'd like to hear it.
Yeah.
New kitchen.
I also have a bit of a confession to make, which
Here we go.
Oh no! What did you do now?
Well, this is more just something that.
He's got another holiday booked when he's.
Yeah, I'm going to be away for 6 months. No, it's not.
Wait a minute. He's on holiday, and then you're going on holiday as well.
It's nothing to do with holiday. Okay. So, back when the show first started, technically in September, this is when we did first start doing it.
9th, yeah.
The 9th. So I actually directed the first show.
Did you?
I did, yeah. I had just come back from my mini moon with my wife, and just literally Terence came in being like, "Yep, I barely had any training because the show was really, really fluid. Just came in, made it happen." So yeah, I used to direct the show obviously, and then now I'm somehow on here with you guys. So it's happened a lot. Obviously, we kind of like revamped the project as well. But at the start, of course, like Monkey Man, basically a cult hero, started the kind of the zoo, as you will.
Yeah.
Okay. And then we had Funky Gibbon.
Yeah.
And then we had Chimpanzee Chap.
Mm-hmm.
Then we had
There's a
Lima Lads. Then we had
Primate,
Gorilla Gal guy. Then we had Primate Pal.
Primate Pal.
Ape Alley as well. A lot of those chimpanzees and primates were me and Terence making accounts and just messing with you.
No!
For real?
Are you serious?
Very good.
We're not Monkey Man. We're not Funky
No, I
Gibbon.
know, because I know that Jamie changed his name because his son's name is Guy as well. So I think he was.
Well, you Gorilla Gal as well.
Yeah, Lima Lads. I think Lima Lad was Terence, actually. Chimpanzee Chat was mine. Primate Power, I think, was mine as well. So, yeah, it was... I've been meaning to tell you for a long time, but I just wanted to find the right moment. So, there we go.
You thought this was it?
Yeah, we've been messing with you for a long time
Oh,
now.
my goodness.
So,
It's
yeah.
all coming out now.
And now I can mess with you live, so it's even better.
Any other confessions?
No, that's the only confession. So when there's a there he is. So as we're talking about the start of the show, I wanted to kind of ask you guys probably some highlights since we've started this kind of project. Of course, like I was kind of doing some of the operational stuff, the directing stuff. We're getting to know each other a lot more, and then I kind of took over the producer role. So a lot's happened since September, especially since April when I started producing. I just wanted to see if you guys had any like highlights.
I mean, there's without doubt Tom Wilson home, teaching him about P ratios. When I had my I had the polystyrene blocks, and he was getting so hard to work out, and then to demonstrate what happens in a profit warning, I knocked them all over.
That's in the promo.
His face in that second is just
that's a good one.
That's why I'm in this.
Yeah, just to mess with people.
My favorite moment was all excited about the show. Right, we're gonna amp it. I'm all set. I'm all ready. And then someone didn't tell me that there's stuff going on, and they were rejigging, or you guys were rejigging the studio. So I came in and everything was gone, because I think you were carting out the desk and everything, and the chairs, the comfy chairs, hadn't come back in.
Oh yeah.
So I came in to just a carpet, wondering what happened.
Yeah.
That's likely to happen again in 2 weeks, right?
What, with the revamp?
Yeah.
Well, it'll be more like 6 weeks, I reckon. That's a very rough timeline.
Yeah.
I think the Christmas special was fun as well.
Christmas special was a lot of fun.
That was good. That was hard to do technically.
Yeah.
The studio's not big. It's quite a chilled space, quite a small space. It's quite an old studio actually, a bit of history. I think this is about 12 years old, the studio.
Yeah.
And then
What is the design life on our machines out there? Is it 10? 10 years?
Oh yeah, most of our kit's like 10 years old.
The studio's
Probably the best highlight.
Feel free to add in your own personal highlights of the show as well.
Yeah.
We see Boise's kicked that off.
That was good.
Yeah,
I had a lot of fun with
wonderful.
that. It was really hard with conviction to basically say to you, no, you're wrong. And I literally gone on 3 different websites. I was like, no, I'm pretty confident here. But when you're questioning someone who does this
First
for a
and
living,
only time in history that the CPI time has been changed.
yeah, and I was very happy. But yeah, questioning you live, I had to go in. I had to go in all guns blazing.
Also breaking the live stories. I think that's been a lot of fun. So the Japanese rate decision.
Yeah.
And then
China Tuesday.
China Tuesday. That was one of our first ones.
Yeah, that was great.
And then the coverage just a couple of weeks ago of the announcement of the China deal.
Yeah, sure.
How low would the tariffs go?
Well, when the tariffs started kicking, that's when I took over as producer. So when I was taking over producer, it was basically it was temporary. It was like, look, you know, I know the show, I know you guys, I know how to operate it. I will come in for a little bit. I'll steady the ship. I literally was here to steady the ship. And then Trump does that and announced tariffs, and it just kind of I mean, I'm very, very happy. I love it. But it was more like, bloody hell, what have I signed myself up for temporarily? And then now it's, you know, Monday to Friday.
I just had a message from one of the viewers. When is your safari starting?
In about 6 weeks, yeah. When we do the studio revamp.
You're just warming up for it today, are you?
I am, yes. This is I like.
You need a hat. You know, one of those like hats that with the shotgun. You know, I can see you in the savannah.
Never done a safari before, to be honest. I would like to.
Jugger, yes, you are correct. 7 p.m. for the announcement of zero rate cut, and you get the projections at 7 p.m. as well.
It's a dot clock.
But then 7:30 p.m. is when the press conference starts. But I think the real meat on the bones today is going to be in that 7 p.m. release, and we'll remind you how to skip ahead as well and get that first.
You got your lasagna ready? Your microwave meal ahead of that?
No, I haven't decided on that yet. Let's just see if. Sorry, go on, Phil.
No, I'm running out of steam here, to be honest. But I wanted to also ask, because we've talked about the past, you know, I want to talk about the future. You know, we're now in a good rhythm with things. We've got a great community, we've got a great fan base, and we've been working together for a little while now. We've got a new studio coming up.
Exciting.
I would. It's don't worry, it's 7 p.m. I wanted to ask you guys, what excites you guys about the future? What are you thinking about the show in the future? What should people expect from the show in the future? Of course, these are all hypothetical ideas that we're talking about, but this is what kind of formulates potentially the future of what we're trying to create here.
I think, and breaking news, the most exciting thing is we have actually hired a new video editor.
Yes.
So this video editor hopefully is going to take 2.5 hour show and condense it into 15 minutes. So if you do miss it one morning, then you can watch the catch up that evening. I think that's one of the most exciting things that that's coming.
Sure.
Yeah, and that's right. We're going to get more shorts out as well with this new editor on board. And of course, it'll free Rich and I up to do lots more exciting things as well, because we'll have someone on site to do that.
Lovely. We've got a question. I'm a floating head currently right now.
No, this is about tonight. So Federal Reserve tonight, Monkey Man, just for you, I will go live on TikTok. There you go. Even though we've done a morning show, a Chicago morning show, and then the Fed decision tonight. Yes, I will do that over the SERP.
This show is just for Monkey Man, then, isn't it?
No,
All this effort, time, money, it's just all for him.
And it's you know, a worthy cause, cause.
Just speaking of which, if we can just go to my screen, should be summary of economic projections, gents. Is that the right one? And then if we can zoom in, then that would, no, so not that one. So it's wrong, is it?
The other page. Let's swing over to Rich's other page.
Yeah,
do
so
live.
take that off again.
Take it out. Take it down.
We'll do live technical change here.
Yeah.
So, Angeline, what excites you about the future of the show?
I'd like to see some of our viewers come on and speak to us. And, you know, like Rich said, it doesn't have to be live if you don't feel like that. Oh, my goodness me. There is Luke in a Burberry top.
Yeah, but he's not on screen.
Thank goodness. But it'd be nice to have some of you on, even if it's just your voice, you know, calling in. And, you know, this is a show that is, like Phil said, for you. So let us know what you like, what you want to see more of. Is it more trading experiences stuff? Do you want, you know, more sort of snippets and, you know, snippets of technical analysis? Or would you prefer more shorts and snippets from the guests that we've got on? Let us know, because it'd be wonderful. And that's what drives this show, right?
Right, let's try and zoom in on that address bar if we can in the gallery, please. I know that's tricky, but if we can zoom in there, please. And then
there we go.
Up. Yeah, perfect. And a little bit more if you can. So you can see, perfect. If we go along, it is currently 20250319. That's because this is the summary of economic projections from March. The date in March meeting was the 19th of March. So we simply take that off. So we get rid of the 19, we get rid of the 3. You change that with June the 18th. Don't change anything else. And then we hit enter. Now that will show you page not found, of course, because it's not out just yet. But if you refresh that and you keep refreshing that at 6:59 and 59 seconds, then a second later you will be the first in the world to get the correct page. So just put in today's date, backwards format, of course, because it's the US of A, and you'll get summary of economic projections. Then you simply scroll down and you go straight in to what this number down here is, 3.9, 3.4, 3.1, because that's where they think the rates are going to be in the future. And the inflation numbers there as well. And then the unemployment and GDP. So that's the important ones. That's how you know tonight if we're going to see some kind of jump in the market here, even though it might have its eyes elsewhere.
Switching to the markets then, you know, there's a lot going on in the world right now. What do you think what's going on in the world right now actually affects markets and affects people's long-term view about what they should do?
So unfortunately, you go back to 2003, and I remember because I was sitting in a pool room in La Manga.
Where's La Manga?
Where's La Manga?
And La Manga's in the south of Spain. So we're at my friend's father's place, and you know, live CNN, and you saw the soldiers moving into Baghdad, right? And you saw them take down the head of Saddam Hussein, you know, the statue.
Sure, yeah.
And that was the bottom of the market. Now, the market had dropped and dropped and dropped into this because it was obviously worried about what was going to happen. But that was the low.
Yeah.
So it's almost like we're already looking forwards towards if they manage to take out the Iranian regime, right? Now, it's a very difficult situation because the Iranian people, a lot of them don't necessarily like the regime, but they are very proud of their country.
Yeah.
So I think there's a big risk here that the US misjudge how much the people get behind their country, and you don't simply have a situation like Iraq where it's a walkover and the market goes up from there.
Yeah.
So I'm really worried about this, and I think that whatever intelligence he got within the last 48 hours to say you can take this regime down, then I think that's a real risk.
Sure. Angeline?
Yeah, I think there's a real issue there as well, because no one or at least the market suggests that not really pricing this danger enough.
Yeah.
And they're almost, putting the blinders up, right, Rich? It feels as if it's just not taking this into account how bad this could be. And all it takes is for misstep by Trump or someone to say something, and then we could have a really all blown out situation.
Yeah. It does just feel like at the moment it's I mean, you guys keep on joking about Taco later, and there might be someone checking out, but it does seem like that type of personality where if you do question him, he takes it as a real personal insult and he wants to prove himself, which I think having someone with that much power in the world, yeah.
I'll teach them to call me Taco.
Yeah.
Right. You must have unconditional surrender.
Yeah. So yeah, it's a bit of a worrying time.
Yeah, so Kirky says they may not go for full regime change. You do not say that you're potentially going to assassinate the head of another world leader unless you know that you can go for full regime change. What he said at the moment is, we know where he is. We're not going to take him out for now. I mean, that's just ridiculous on all forms of diplomacy, to walk away from a G7, turn your back on the rest of the world, and then come out of a meeting and say that you're not going to take out a world leader for now.
Yeah.
So that's why I'm saying they've clearly got intelligence that says that they can.
But is this something for investors and people to be aware of, as we're maybe like sitting in things at the moment when you've basically got a will they, won't they situation? Should people be doing something, with their situation?
De-risk.
Should they be risking themselves?
De-risk.
And spread out your portfolio. That's one way of doing it. Spread your eggs into different baskets. Take a look at some defensives. We talked about this a great deal with Piers and also with Matt Arber earlier this week, about looking at making sure you invest in things that might not get caught or affected by the unrest over there if it all blows up.
And cash is the most simple one of all. It's really not that much of an opportunity to hold cash at the moment at 4.25% in a IG ISA account.
Or 8.5% as the bonus.
Yeah.
You missed
Too
it.
late for that.
Yeah. May 31st, people. May 31st. RSAC saying, Ange, interviews from UK companies so that we can know about them more, specifically AIM ones. Great suggestion there, RSACs. Hope to see you on Friday. Fred as well chiming in.
Just on that, I've actually got a call with a PR company today that is looking to offer us access to more UK companies and CEOs. We had Andrew Webley. I can't promise you that we're going to get another 300%er in a couple of weeks, but we certainly are in touch with the right people to bring you some more CEOs of UK companies.
Yeah.
And we've had some great guests on recently as well. I think last week definitely was a highlight of some great guests that we had. We had Philly.
Yeah.
We had Michael. Joachim as well. Joachim's great.
Nailed it on Friday. That was
Good timing.
Yeah, and he brought in a map as well.
Yeah.
So we could see where the nucleosides were. He knows I love a map.
Yeah.
But we can get plenty more of those guests for you, especially smaller cap companies. We can get smaller mining stocks as well for you, because I know there's a lot of interest there. RSAC saying, great, brilliant. Monkey Man, I'd like Axel to do more education on charts, maybe snippets from his courses.
Maybe the video editor can help us with that a little bit.
trend is
and
your
get some
friend.
More content on the channel. Axel's doing more. He obviously has Trade of the Week. So Wednesday today, charting crypto, that's a regular slot, 8:30, where he just purely does technical analysis on crypto charts only. And yeah, so we're kind of getting people more and more kind of regular segments in, but of course the special guests that we have on as well. So there's anything topical. We obviously try and match it with people, but of course people's schedules are very hard to knuckle down.
Let us know what sectors you like us to cover as well. Specific financial instruments. We'll try our best to make sure we cover that for you.
Lovely. I've got no more questions. Do you have any questions for me? Should we flip it around a little bit? I'm not sure why I'm asking that question.
So I'm getting interested in that you obviously do the timetable for the week, the itinerary of what's coming up.
Yeah.
And I do see you penciling yourself in more and more.
He does. He's even got a different colour for himself.
I've given myself a colour.
So do we have to ask whether you're enjoying it or not?
I mean, I wouldn't put myself in for enjoying it. It's not self-infliction of pain. Part of it is also, we've got people do have schedules as well. We do have dropouts, etc. And I also think occasionally, I think this segment defines the point of this show, in my opinion. It's about market, it's about information, it's about educational. But I think the point of it is, I don't think there's another show like this where it's involving the community. Like, you basically comment and we're asking you live, we're talking to you live. I don't think you get that often, and we want people to be involved as much as they can from essentially obviously watching on the screen. So I think this just adds a nice element to that. And it kind of, I want people to understand what's going on behind the scenes and what's going on in the show. And this is I'm not coming on every single week. I can't be bothered for that. And I obviously don't have the right wardrobe for it either. So I think this just kind of gives a bit more power to the people when it comes to what they want on the show. So I'm enjoying it. It's been good fun so far.
And big shout out to Sophie Cocker as well for helping us take the show from what it was 3 months ago.
And supporting us
to what you have now.
Yeah.
We're going to drag her on one day, because if I'm on here, Sophie, then
Yeah.
I'm sorry. Like,
Sophie
you don't get a free pass.
looks very telegenic, so she ought to come on. She keeps saying she's got a face for radio, but I don't think so.
Yeah.
Good stuff. And Andrew McKelvey, explanation of order data, level 1, level 2, and level 3. That is something absolutely we'll do. I know the PCMs will be loving to talk about that, because I also need to get that in so I can see the auction, where things are on crossing in the auction as well, because I know that will help.
Right, we got the poll results out. Will the Fed cut rates? No, 87%. Yes, 7%.
And only time will tell. I'm glad I've got a catchphrase. I know you hate it, but it makes me laugh.
You changed it up when you were ill, Rich. You started a new one in always. There's another one that you had.
Time always tells.
Time always tells.
It's a bit more of an abbreviation of the catchphrase, but I wouldn't say it's a new one.
Yeah.
But yeah.
Good. Right, next, coming up, we've got, Simon Popple. But first of all, it's when Philly came in last week to talk about one of the courses that she runs, and basically money mindset, how understanding money mindset really helps you in everyday life.
But before we go, what we're going to ask people to do?
Like and subscribe, people. Slam that like and subscribe button and tell us, why you love the show. Tell your friends, your mum, your dad, your hamster, your fish.
And don't forget to join us on Tasty Live. They have their own YouTube. You'll find us on Tasty Live this morning. And both Angeline and I Chicago time, it will be...
It'll be about 3 p.m. UK time you guys are going on. So if you want to see more of these guys on your day, I'm not sure why you would. I've got to do an extra long day for it as well. So me and Terence are doing a super shift today to get you guys on there for tasting. So, but to be honest, the tasting team have been great to work with. It's been a pleasure so far. So we're looking forward to another long show.
Fantastic.
Great. So yeah, do like and subscribe, support the channel.
Get us to 2,000.
Get us to 2,000. We've already reached a really good target, but people will love to see more targets being beaten. So, thank you everyone. Thanks for having me. Thanks for entertaining me.
Andrew McKelvey's just come out of a corker of an idea as well.
Ooh.
How about a screen behind you showing the FTSE 100 or S&P? That is exactly what is coming into the new Look studio.
If you keep watching, you might get what you want.
Yeah, if you keep watching, you'll see this big screen that we hopefully have ordered and paid for already. Yeah?
Perhaps.
Right. See you tomorrow.
Thanks, everyone.
That was a little bit of a shock because they were getting going and there were some real swings. I think part of what I do is that sort of psychological side of we do get downs as well as ups, and it's only a loss if you sell. But by doing nothing and actually letting things recover quite quickly, you might think now is how much further is it going to go for the time being.
I am very happy to welcome Philly.
Thank you.
It is wonderful to have you back on. Last time we had a really good conversation about your background, which of course was in wealth management, and then you've gone out yourself and started your own business. And just remind everybody what line you're going down, as well as being on TikTok with that's how we first met. What else does that consist of?
Yeah, so it's really still teaching people about investing and getting them empowered to do the investing themselves, but also now thinking about that mindset element as well, and what stories you're telling yourself that might actually hold you back from building wealth. I found most people I'd speak to didn't just want the investing, that there's more around it that you need. And so actually with this coaching piece, you aren't telling someone what to do, you're actually giving them the tools. But it's not just about the knowledge of what to do with your money. It's actually then the mindset element around it as well. We're all telling ourselves narratives all the time. So it's combining the two.
Because I think if you're not at some kind of calm with yourself over your general financial situation, then that's not a great building block to start investing from.
No, absolutely not. And if you are set in a state where you need to stay safe and thinking about that financial security, for most people, they see investing as risky. It's sort of almost like everything's the same. Whereas, you've got completely different levels of risk in different investments. And it's just really getting that message across, making people feel confident that it can be for them, and then the best ways to go about it.
And that's not just women, it is some men as well, isn't it? But it does seem to be predominantly the problem and more common in women, perhaps just because of the last 100 years or so.
Well, I mean, we could only get a mortgage and a bank account sort of 50 years ago. It's been so recent that women had any power to even choose what to do with their money. So I think that's still the case in a lot of sort of marketing and a lot of the language used. It's still quite restricted. So that's why I always try and sort of talk to women as well as men. But when I do help men, it tends to be ones where they come from a background where there was no high earners in the family. And now almost as adults, they don't feel comfortable to ask anyone. It's almost a bit embarrassing. So it's quite a nice. I like that as well, because it's that's mindset, it's knowledge, and so it's interesting as well.
And so, what kind of conversation do you have when you're just starting off with a client? Then maybe we can even do a role play.
Yeah, sure.
Oh, I don't know what I'm signing up for here. Right.
Well, we always start with sort of the things you heard growing up.
Mm-hmm.
So I might sort of say to you, when you're thinking about money, what do you think it is? Money is, how would you finish that sentence to you? What is money?
Money is, a means to get things in life to make you more comfortable, I would say. So I think of, you know, your general initial payments that go out, bills, and that we've all got. But what on top of that can help you lead a more comfortable life? And that's because my mum and dad both came from council, you know, kind of housing, as many are up in Scotland. And my dad worked up his own accountancy business, and my mother was in nursing and hairdressing. And so, you know, a lot of their income was going towards just bills.
Yeah.
But then as my dad's business got bigger and bigger, then, you know, that luckily allowed my mum to take some time off and bring us up.
Great. So even just hearing that about level of comfort, that's sort of positive language.
Yeah.
But I often will then scan for, is there something, you know, sometimes someone will say a negative word as well as a positive word, so they can almost see the potential for something positive, but perhaps there's also a, you know, even the idea of comfort is something, but it's not saying, you know, it's abundant, it's infinite, it's, you know, allowing you to take over the world. Not that you need to take over the world, but it's just looking at what messages you're sending yourself. And actually, if you've experienced that sort of seeing, going from just paying the bills to there being a little bit extra, that's great. You've already seen that sort of slight possibility of what is possible. But yeah, so I'd start off really thinking about, you know, what phrases you hear growing up. What are those narratives you're telling yourself which might potentially limit how you are as an adult with your money? Or you know, sometimes there is already an abundance. Like I work with some business owners where they may have come from a background where you're struggling, but they now just are in such a strong position that they think, right, I've just got to make the next, you know, large amount, and they just do it, and it's determination and it's a different mindset. So it's just acknowledging where you are.
It is funny. A lot of my friends and I discuss, looking back to when we were in our mid-20s, that we weren't earning a great amount, but life did seem easier. And now you get to a point in this part of your career when, you know, you're meant to be sort of built up your salary or your compensation, but it doesn't seem like there's the headroom that there should be.
Well, that's the classic lifestyle creep, isn't it? It's where you get the pay rise and then things just gradually get more expensive. You're probably not still paying the same rent that you paid when you were 22.
True.
You know, things have also gone up, you know, in terms of cost, perhaps not as much as the 45% inflation in Turkey. Their interest rates are 45%. And I was speaking to a financial professor last week randomly in the hotel.
Yeah, as you do.
45%. So, you know, she was saying that they're you know, their salaries are going up to cover those costs, but they're not getting any richer because things have gone up in price. But obviously on a much smaller scale here, things cost more, you know, but I think it's that lifestyle creep. And also perhaps, you know, you get a mortgage instead of rent, perhaps you have children and there are childcare costs. You know, there are different things that do add on top. And if you don't get disciplined to start paying yourself first, you know, with your salary increase, can you know, siphon a bit away so you don't feel the increase of the new salary, so that you can actually start benefiting.
And that's the, you know, the kind of thing that you help with, because with the coaching, you can make people aware of what the options are. In fact, we've got a question on the chat here. When's the best time to start a pension for your children? And that is one way of you just squirreling a bit away each month. As well as that, what are the other options?
But that's, I think some people are keen on pensions for children, often because they don't want to put money into the junior ISA because they're scared that the child will get the money at 18 and not be sensible with it.
Yeah.
But part of what I do, and I talk to parents a lot to sort of help about how can you actually educate your children up to the age of 18 so that when it gets to 18, they're empowered to maybe spend something on something fun and enjoyable, but actually some of it stays invested and carries on growing. You know, that's why a lot of people used to put money into trusts so that they could get it at 25. They thought they'd be more sensible.
Yeah.
But I think, you know, you can put in from when your children were born into a pension. It's just that you probably won't see them enjoy it. by the time they're late 50s. You'd hope that you can help them sort of sooner than that. And that's why I personally put into junior ISAs for my children as opposed to a pension. Maybe I will do that in due course. But I think great to start with a pension early for people. But I think the junior ISA, you can help them sooner.
And straight from, 30 days after they're born kind of thing.
I had a client who was an accountant, and when he had his 5th child, it was at the end of March, and we managed to get his junior ISA open, just to get that allowance. But I mean, the fact that it's now 9,000 for children, if you've got a family of 4, 2 adults, 2 children, it's a lot of money you're putting in, which most people in the UK cannot do.
No,
so I think I always say, even if it's a small amount, it can be, and it doesn't have to be regular, actually. I know people do talk about investing regularly, but if you can put even a small amount aside into either the pension or the junior ISA, it has time to grow. So
great. I am on at them here at IG to get that junior ISA as an option for people, because
it'd be a good idea.
It's great, isn't it? And then, so we've got past that point then. Okay, I'm earning the salary that would have seemed like a dream when I was in my mid-20s.
Yeah.
But I still don't have the discipline to know when the check comes through, you've paid your bills.
Yeah.
What do I do with that little bit that's left over?
Well, that's where you're thinking about what do you need in the short term that has to stay as cash, medium term, and then long term. So it's really getting clear on what matters to you.
Yeah.
When do you actually want to achieve those things by? And then if there is something that's longer term, could you put that aside to invest? And then that is that regular putting it aside. And if there's 1 month where you pause the direct debit, that's fine. But it's getting it so it's automated and you're not having to think about it.
And it's habit, and it's negotiable, but not unless there's a good reason.
And it's not checking it all the time, because I think that's where you don't do so well.
Yeah.
I think you want to just invest, keep going with it, and check in that it's sort of in line with what you want.
Okay. And generally, do your clients fill up their ISA first of all, and then, after that, are there obvious routes to go down, or is there options?
I think it will definitely depend on the person's individual situation, and I don't give advice on it. I just explore the options for them. But it's definitely thinking about the different diversification, the different tax things. What are they putting into their pension? What's going to optimize their situation?
Yeah.
And then that balance between the money today versus in the future.
Yeah. And then
tax isn't the enemy. I also think that, having money in a general investment account, you're still investing. It still has room to grow. It shouldn't be that you fill up the ISA and then that's it for investing. One of my best clients sort of really celebrates the wins and, takes the profit, sort of almost celebrates the tax, the CGT. And I think that's he tries to balance it, but now the allowance is so small. But I just think those sorts of things is actually approaching it positively, that this is a winner and we're now trimming it.
Maybe you'll have to have a discussion about spread betting at some point with one of your clients. Now, what about the cash ISA situation? What's your feeling on that? Because personally, I don't really understand why cash ISAs exist. But yeah.
Well, for some people, if they've got something they know that they've got cash set aside for, and you're either a higher rate or additional rate taxpayer where you've got so little interest you can make before you have to pay tax on it, then the cash ISA can be a nice place to park it. If you know you're setting money aside for buying a property, that can be tens of thousands.
Yeah.
Low hundreds, it can be a sort of substantial amount of money that actually now is generating with a 4% interest rate quite a lot of interest. So it can be a temporary place, as in I say temporary, sort of maybe in the 2-year time frame. So I think a stocks and shares ISA, that's what I use because that's where I'm at my stage at the moment. But I think for some people it's where they want to put their money.
But if a stocks and shares ISA offers interest on the cash,
oh yes,
in that, then
And there's some good rates out there as well with those. So I think if it does get reduced, the amount you can put in, there are ways around it. I mean, cash in a stocks and shares ISA is usually there to be deployed, isn't it? But if it can earn interest while it waits, then that could be a good workaround. I do wonder who has been advising the government on this cash ISA thing, because I don't think, I speak to so many people, men and women, who are not investing, and it's not because they're restricted. If they get restricted on the ISA front, that doesn't mean they're going to make them invest. We need to sort of educate on the investing piece.
There needs to be a huge national education on the potential for investing, and
I'm not saying just for the UK. I mean, that would also be, let's not restrict people.
Let's start with the UK first. Just because
sorry, not for education. I mean for restricting it to just UK investments.
Right.
Because they were talking about that as well. Do you remember they talked about that extra 5,000 in UK investments? I just think let's just stick to letting people know what a sort of diversified portfolio looks like. Let's show them actually, yes, that can go down, it can go up, but also what's the risk of not investing, keeping your money as cash.
And then we saw, I assume, 6 weeks ago, 2 months ago, a lot of people would have looked at their investment account and been horrified that suddenly 20% has just disappeared completely. And it's a big number, isn't it? Because there must be a phrase for you always set your expectations on the highest it's been. And you don't think, oh, I've made 25% and 26% in the last 2 years. It's probably about time, it gave some of it back. Then it did give 20% back.
Yeah.
Did any of your clients, I wish I'd sold, I wish I'd moved some of it into cash? Was there much of it?
I think because some of them are newer to investing, that was a little bit of a shock because they were getting going and there were some real swings. But by doing nothing and actually letting things recover quite quickly, you might think now is how much further is it going to go for the time being. But yes, I think part of what I do is that sort of psychological side of we do get downs as well as ups, and it's only a loss if you sell. So it's that crystallizing it that it doesn't look nice when you see it go in the red.
Yeah.
But actually that people are only investing if they're long-term investors, if they can afford to lose it, if it's not needed for something in the short term. And I think with that in mind, it's never a nice feeling to see, but actually they have that information and knowing actually that some people, they can now put more in and see how it grows over time.
That's it. Yeah. Is it about having a little bit of a pot on the side so maybe you don't put everything you can in at once, or even now that we're back up at 6,000, do some of your clients look at alternatives, whether it be a different area, different geography in the world, or maybe...
I'm definitely not a sort of just invest in the S&P 500 person at all, and never have been. I think, with my training as an investment manager, it's always been to look globally, and then also at the different asset classes. So that diversification is key. And I think the alternative space is really interesting. Things like corporate bonds as well, just making sure that it's not just the equities, that you've got a spread, geographically, you've got the currency, and then alternatives, I think.
Yeah. So, and in the course, do you get as far as talking about all those things?
Yes, I like to make sure that people feel empowered to go and set up their own portfolio, and that it's diversified. So we go through looking at, how would you actually build this yourself? What would it look like? Again, not giving advice on it, but I will show different options and explain the risk of it, but also that you are spreading risk by diversifying.
Yeah.
And it's making those things not scary to people. It's quite reassuring and
demystifying.
Totally. And the confidence levels go, I mean, every time I've run the course, I've gone from people 1 or 2 out of 10 to about 7 or 8 out of 10. It just in, a matter of weeks. So it's really kind of, I love it because it gets people feeling calm and confident about investing that it is for them.
And it's primarily women that you coach.
Yeah.
Well, I'm sure you're going to. It's growing all the time, isn't it? You're going to be busier and busier. But certainly, if there's anybody watching that feels that somebody in their life might benefit from this, where do they find you?
This is Philly Financial on TikTok, and phillyfinancial.co.uk is my website.
Awesome. And we can have a quick look at the website. There you are. So yeah, why financing coaching on your approach and everything. And you do groups as well as one-on-ones?
Yes, I do. Monday nights. We actually start tonight, 8 till 9 p.m.
Right. That's a brand new course.
Brand new cohort. Yeah, starting tonight.
Is there any places still left?
We've got a few places.
Get my sister on the phone.
So for women earning over 100,000, it's pretty much professional women going up the rungs at work, busy, don't often stop to think about what matters to them, what they're doing with their money, kind of feeling like, have I missed a trick? Quite often they want to check what they're doing is right. Often either have money saved, but not working harder than just cash.
Yeah.
And it's that element of being busy, but actually if you can give yourself an hour a week, you're then set up, basically. We get you feeling so calm and confident that you just know what you can do with your money.
Are you surprised that there isn't the level of education needed and other people like yourself that are actually going out and trying to make a change?
I think there's so little out there really that there's a huge need for it, and even though there are more people training to be financial coaches, I guess it's just reach really. If we can get it in more in schools, universities.
Yeah.
I'm trying to help with grad schemes as well, just to try and get people as they start working. Most people I speak to in their 30s, 40s, some in their 50s say, I wish I'd known this when I was 20, and you could really get people going sooner, because you don't need to start with very much. That's the thing. You have to try a little bit harder when you're older.
Excellent. Philly, thank you so much once again for joining us.
Thank you so much.
And I look forward to seeing you in the future.
Great, thank you.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show is finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
If you look at those four factors, will it give you 100% guidance on what's going to happen with the gold price? Absolutely not. But will it give you a strong feel for where it's going? I think it does.
Hello, trader friends. Welcome back with me. And Simon Popple is back by popular demand, director of the Gold Program.
Great to be here.
Scare you off the last time.
No. Well, gold is continuing to fly, so still very topical.
Yeah, it is. And I mean, just whacking up the chart, trader friends, this is what we are talking about here. It is still shining there, as you can see. We've seen a bit of consolidation recently, but it has broken past that 3,300 level and approaching the second area of interest. You see my rectangles there, Simon? I like to draw that for our trader friends because they understand where the support and resistance lies, where the interest lies. And if we break through the second rectangle where my cursor is, we could then move towards highs last seen in May. But the key question here is the big, beautiful bill. We talked about this earlier. If it passes, what is clearly we're going to see more spending, obviously, and this is expected to boost prices. But what if we get a watered down version?
Yeah, I mean, I think that, first of all, the US is a massive driver of the gold price. Whatever happens in the US seems to determine, what happens to the price. And the bill will certainly, I think, spending will go up, and some of that will feed into spending on gold. But I think you need to look at the sort of the key drivers of the gold price. The MIDI we discussed last time of market uncertainty, inflation, debt, and interest rates. And I think all four of those are working in gold's favour. So obviously we don't know what's going to happen, but I think the price is more likely to go up than down.
You talk a lot about MIDI, don't you? Trader friends, we've talked about this the first time he was here. These are the levers. Lots of people go, and so many things, there's so many factors to think about when trading gold. But we like to keep things simple here. So you've got an acronym that's really interesting. Just run us through this.
Yeah, no, sure.
MIDI.
I mean, MIDI is just trying to keep things really simple. As you rightly point out, there's lots of levers of the gold price, but MIDI, if you look at, again, look at the US, but market uncertainty, inflation, debt, interest rates. So if you look at those four factors, if they are in favour of a higher gold price, so more market uncertainty, like, the tariffs, no one knows what's going to happen there. Inflation, if that goes up. Debt, I haven't heard a single argument as to why that's going to come down anytime soon. And interest rates, which is an interesting one, because on the one hand, there's pressure to bring them down, but if inflation's going up, it's quite difficult to bring them down. But I think that if you look at those four factors, will it give you 100% guidance on what's going to happen with the gold price? Absolutely not. But will it give you a strong feel for where it's going? I think it does.
Yeah.
And so...
And that strong feel, especially when you talk about debt. Let's whack up my chart right now. It's no surprise there. Take a look at this clock that we often watch on the left-hand side here. I mean, there's no sense, no mood music that suggests this is coming down anytime soon, right?
Yeah, and absolutely. And I think it's one of those things where, debt will continue to go up, and I've got a chart on my website that shows that over the longer term, as debt goes up, the gold price goes up, and it's a pretty simple relationship.
Yeah.
So if something happens where suddenly the US debt comes down, then I think that's certainly something we need to look at, but I haven't heard any credible argument for why the debt will come down. So
yeah, and if this bill goes through, it's another $3.8 trillion to the federal debt that's expected to be added over the next decade.
Well, exactly. And on the one hand, it's great that they'll be spending more on various things, but unfortunately, it's paid for by debt and not taxes. So higher debt, I think, good chance it could lead to a higher gold price.
So let's take a look at the price of gold. A lot of people saying, hey, Ange, it's had such incredible returns, right? We've seen gold prices gain a huge amount over the last few years. I mean, since 2000, the figure you like to always sort of talk about is in British pounds. What is it, 10%?
It's over 10.6% per year since 2000. So for over 25 years, the gold price has gone up on average over 10.6% a year, which is, it's pretty good.
Lots of people going, well, is it too late? Is it too late to jump in now? Have all the gains been had? I kind of think, in my humble opinion, with all these factors still in the pot, still in the mix, it's not too late just yet. What's your view on this?
No, I agree with you. I mean, I think 2 points. First of all, look at MIDI. Is market uncertainty coming down? No. Inflation.
Yeah, it's
debt,
still going up.
Interest rates, you know what I mean?
Yeah.
If you look at my website, the gold program, I've got a tab on gold price projections, and this is really looking at history, and looks at some forecasts done by Incrementum. And I think that first of all, they've shown they're pretty good at forecasting, and secondly, they've given an idea as to where the gold price will go. And I think that could be really, really exciting. So no, I don't think we've seen anything like the top of gold.
Let's talk about some of the ways to get in. So let's say you're sitting there, with a cup of coffee, and you're saying, okay, well, I'm really interested, and I would like to get in if you haven't already. I made this special chart for you to try and illustrate different ways that you could gain exposure to gold. So let's take us through it, Simon. Let's start on the top.
Yeah, I mean, I think you start off with physical gold.
Yeah.
I think that's the lowest risk. Incredibly liquid. If you want to sell your gold, you can sell it, pick up the phone with your dealer and sell it straight away. Probably get cash in your account within a few days. So very, very liquid.
Mm-hmm.
It's also tangible. There's, as you say, tax advantages on coins. Yes, it's wearable. The storage and insurance costs, yes, you do have to pay them, but I think it's very important to realise that you don't have to take delivery, so you can get the people you buy it from to store and insure it for you.
Yeah.
Yes, there's a cost, but
so if it's like the Royal Mint, you just pay them to.
You just pay them
storage and insurance.
A monthly fee.
Yeah.
It's not much. I don't know what it is exactly, but it's probably not dissimilar to an annual management fee that you would pay a fund manager to store and insure it for you.
Mm-hmm. And gold ETFs. I mean, we've got lots and lots of trader friends here that look at gold ETFs and indeed buy them. This is easy trading, low fees, no storage hassle. What are the downsides?
Well, I think gold ETFs, I think they're a very good short-term home for money. But you have to remember that there's often limitations on what you can actually redeem them for. So you redeem them as cash rather than gold. And quite often the ETF is actually backed by, well, it's derivative driven.
Mm-hmm.
So the uplift is in your investment is basically down to derivatives. And so if you're trying to move away from derivatives because you're concerned about the financial system, then it doesn't make much sense to invest in something which you're actually trying to move away from.
The point that I keep facing when I look at a gold ETF is you're essentially paying a middle person to gain exposure. Is that your view as well?
Yeah, I mean, some vehicles, they say, oh, we're backed by gold.
Yeah.
And, if they say, oh, we're backed by gold, my take on it would be, well, why don't you buy the gold anyway and have it, under your name rather than their name? Because then you can, you set your own rules, redemptions and things like that. And also, if there's costs to be incurred by storing and insuring it, they will have to pay it, and therefore you will have to pay it. So by investing in that type of vehicle, you might dilute those fees a little bit, but personally, I'd rather have the control of the gold. And while we're talking about that, another thing I like about gold is it's divisible. Compared to, let's say, a property where it probably costs, let's say, £300,000, £400,000. If you only need 20,000, you don't want to have to sell a £400,000 property to get £20,000. You can't just sell the spare bedroom. And whereas with gold, if you need £20,000, you could just sell one bar, a few coins, whatever it is. And you've got your money and you've got the rest of it still invested.
Right. Andrew McKilvey is saying, and it's not gold that's gone up, it's the pound that's gone down because our government, and not just our government really, keeps printing money, keeps the rollers going. What's your view on that, Simon?
Andrew's absolutely spot on. It's
we talked about this earlier, didn't we?
Yeah.
It's like at every single point, whether it's great financial crisis, it's COVID or whatever, we just print money, print cash, helicopter cash, steal from the future.
Well, that's it. I mean, you mentioned the bill earlier about, the US printing loads of money for this wonderful bill, but that's printing money. And so gold stays the same, the dollar goes down in value. And I think that's that's incredibly valid. And one of the reasons why I like gold, because you can't print it.
And that dovetails beautifully. We didn't plan this, I promise you, to my next chart, which I wanted to show you. You have that grey line, which is the dollar, and we have that red line there, which is gold. And look at that, beautiful contrast there, because really one of the things that's supporting gold, in my humble opinion, is this de-dollarization. Right, back to investing though. Some other ways, I mean, we talked about ETFs, we talked about, like the iShares Physical Gold, ETC, Invesco Physical Gold as well, another popular one. But let's take a look at perhaps gold miners. What do you think of, trading the gold miners as a way to get into gold?
I think it's great. I think, once you've got your physical gold and ETF or funds, whatever you like, then I use a fantasy football format to explain the companies, where a goalkeeper is a very large barrack type organization. Then you've got defenders, which are sort of smaller but still very large companies. Midfielders are new to production, and forwards are your explorers. And obviously depending on sort of your level of risk, but I think that you want to have a goalkeeper. You then want to decide how attacking or defensive you want to be. So decide how many defenders you have, how many midfielders you have, how many forwards you have. But I think by doing that, what you do is you get exposure to the sector, but from a variety of different companies. So you don't have all your money on one particular company.
All your eggs in one basket.
Exactly. And I think the other thing is a lot of gold miners, they not only are involved in gold, but they're involved in other commodities as well, where copper or silver or zinc or whatever it is. And so by having a diversified portfolio, you're also diversifying in different commodities as well.
I always say that if you are invested in gold mining stocks, be aware that there is higher risk depending on where these miners are, right? And that risk comes from, if it's, remember that Resolute Mining story when its executives were detained in Mali?
Yeah.
All that has an impact on the share price, which could cause very, very heightened volatility. Simon, would you say you prefer mining stocks that are, in safer or relatively safer geographical, political landscapes?
Yeah, I mean, I there's plenty of companies in Canada, US, and Australia. So if you're going to invest in the sector, then you can get plenty of exposure just by investing in those countries. And not only do you get the country diversification, you get the currency diversification as well. So you're not, let's say, just in sterling. You've got some Canadian dollars, US dollars, and Australian dollars, and obviously you've got commodity exposure as well. So you're diversified on a number of different levels. If you've got a company which is in Australia, Canada, or the US, then I like it.
I am bullish on Greatland Gold, and they've been doing very fine things. Thank you very much. Andrew was the one that highlighted Greatland Gold to me in the first place.
9% today, pretty good.
Julian's message there, am I correct in thinking you don't just print money, you have to borrow it into existence?
Well, yeah, I mean, but if you're a government, then you own the credit card.
Yes.
And so, you don't have a limit. You just print as much money as you want.
Yeah.
I think that's the rub.
Yes, and that's a run with the governments as well, and that is why we're in that sticky mess that we're in right now. And we're seeing the bond vigilantes as well. Very quickly, digital gold, pros, fractional buying, convenience, but the downside, fees and no physical possession. Do you like digital gold?
I prefer physical gold. I think that digital gold is a combination of crypto and gold.
Yeah.
And I think if you want crypto, you buy crypto. If you want gold, you buy gold. And I wouldn't want to have a product that kind of has both. I'd buy either or.
Let's just have a look at, some of the digital gold providers. There are quite a few there. But back to our, I know we don't have much time left. Royal Mint trading is another way, right? We talked about Royal Mint earlier. This is a trusted name. You got that, Simon talked about the secure storage option as well. But, I guess I want to end with, what is your preferred method? Given we have different durations there, different traders with different durations there. Give us a short-term play. So, for example, this week or next week, or if you have a medium-term way, if someone said, I want to be in the market for 3 to 5 years, and a longer-term way to get in.
Yeah, I mean, I would say short-term, I would probably say, within 12 months. No harm in having ETF. If you've got a very short-term view. A lot depends on how much money you're putting in, obviously. More of a medium to long-term, I'd say physical gold.
Is this 3 to 5 years?
Yeah, 3 to 5. Yeah, well, I'd say medium-term, 1 to 5 years. I'd have physical gold, and over the medium term, I'd also look at companies. A lot depends on where you are on the risk profile, but I think that. Physical gold, I love it because it's so liquid, and if you want to sell it, bang,
yeah,
you sell it now.
And you can sell it in chunks as well.
Exactly, and if there's a market crash, that's obviously going to affect your equities. Could affect ETFs depending on what's in them. But if you've got physical gold, it's an asset class in itself. I buy mine from the Pure Gold Company. There are plenty of places. I think all I'd say is you want to do due diligence. We've mentioned the Royal Mint. You can buy gold from Royal Mint. You can buy places like Bullion by Post. And a lot depends on how much you want to buy. Because if you just want to buy a couple of coins and something like Bullion by Post, even though it says by post, you don't have to get it posted to you. You can you can buy it and store it. If you want to buy a bit more, Pure Gold Company I like, and then you've got people like Degussa, there's lots of places, but make sure that they are do your due diligence, make sure they're bona fide, make sure they've got. The company I use are affiliated to the LBMA, and they're a distributor for the Royal Mint, and so you want to make sure that they fit the profile you're looking for.